Good morning, everyone. How you guys doing today? Ding ding. See how SPX0 GTs are looking now. There's a decent amount of puts that were coming in this morning. Looks like we're getting very close to the gamma flip point. Probably bounce on it. It's way too zoomed. Futures, actually, futures are slipping 40-50 a little bit. What's it at? 40-37. That's really just delta neutral, though. Yeah, if someone wants to shoot me a link, we can stream JPow. It'll give us something to do today while everyone builds up straddles around 40-25. Well, maybe a little higher. Looks like right now people are straddling 40-40, 40-55. Ooh, volatility's up. What doing, Vix? Interesting. Nasdaq's the only green index right now. Nvidia's pumping for no reason again. Curious. From the pickle sentiment spy chart you posted, are we in the Gherk buys here area right now? It's okay. I mean, I have a straddle open, but buys what? Well, they couldn't go full bear at market open. I mean, I doubt we're gonna see a lot of full bear today, unless, well, we discussed this last night actually. Unless JPow cries or puts down his glasses, I think the market will be okay. I know you don't want to hear it, but check out Bank. Don't you do this to me. I already had to field stupid questions about penny stocks this morning. Dear God, what a piece of shit. Why are our banks not doing well, Dork? Is it because people aren't paying them? They're massively overpriced interest? Or do you think it's because they loaned out too much money at 0%? I just got an ad for the Woodworkers Association of America. Your ads are very American. That's not what you think it's for, all right? That's That's an ad for artificial intelligence. Those are the hard goods. You crank the wood till it's soft. SPX to 4,500 if JPow brings his guitar to the stream. Maybe the impending fucking credit crisis. Well, we don't talk about that in the news. Not until it's happened, right? If GameStop puts earnings during March OPEX, would Ivy crush her to run? Why? I mean, Ivy doesn't have to crush. Even the most bearish banks are pricing in a 3,900 low. Yeah, they also said that in August. JPM's not. They've got puts at 3,600, 3,630. I like the zero down high interest rates for first time homeowners. First time buyers know nothing, haven't learned yet. Yeah. At what point do you intend to cut your long dated puts if the market rallies today? 4120? Yeah, roughly 4120 on futures. I would cut and reposition. I'd wait to confirm that we're breaking like that level, but yeah. JPM puts are dated for the end of the month, 331. So if Powell starts off by playing guitar and singing Wonderwall, streaming would have to stop, which would delay bad news. Apple 145p is pretty far out of the fucking money, don't you think? I mean, I don't necessarily disagree. How much time are you thinking? You're not gonna buy poor contracts, right? Gurk, ever wonder how Teenage Mutant Ninja Turtles wiped their butts? No. Can't say that I have. I just assumed that that's why their bandanas were really long. Did you add any longer dated puts yesterday or still waiting until this week's volatility? I didn't add anything yesterday. Right? Not on SPX. I sold some CSPs on SQQQ, but they may not get assigned. Turtles breathe through their butts in the winter when the ponds freeze over. I can't smell good. Future's still holding 40-50. This is starting to look a little more bullish. Yeah. I've not been awake for a long time. All right. Are you streaming the hearing? I said if someone wants to shoot me a link, I'll stream it. I don't care. Something to do. Hmm. Do I want to sell 40-50s again today? I'm getting a lot of support here. Oh, Jesus Christ. Ivy is super jacked up. Oh, looks like I'm playing my straddle all day. J-Powell walks up to the stage, starts tuning his Ovation celebrity model acoustic guitar from college, slowly tightens his leopard print headband. Soft lyrics escape his mouth and build in intensity. I can be green, I can be red, I can be violet upside. Market makes lights. We can dream. Finally, I was wondering when Ivy was gonna pump. I'm surprised it didn't go up more yesterday. Yeah, zero DTs are super overpriced. I probably wouldn't even consider getting them. Remember when rising rates were good for banks? Well, that was the assumption that they were going to keep loaning money at those rates, right? There's always margin. Docu puts? Are you buying them for earnings or for SLD? I have some open, but I also own a bunch of shares, so my position's fairly neutral. SLD, it could be okay. Yeah. Docu's been performing pretty well, though. I'd be cautious. Usually it dips harder, especially pre-earnings. Trillions of dollars waiting on the word of a single man rambling for a few hours about how things are not his job. Is this the financial market now? Yes, always has been. All right, let me see if I can find a link for this because no one wants to send me one. Uh, okay, cool. What time does this fucking start? Nope, that's not the right one. I don't want to see Fox's coverage of it. Why isn't it on the fucking Federal Reserve's House Financial Services Committee YouTube?
I mean, in your opening remarks, you were talking.
Senate banking committees today? Oh, here we go. He starts speaking at 10. All right, I got it up. Yeah, you did. Maybe I should get some straddle. Strangle? Hmm. How far out do I need to go to get? Why are fucking SPX options loading today? 4,000? That's too far out of the balls. 4080. 4020. These are still too expensive. And how high is, when does IV chill the fuck out? A little better. As I'll just buy them for March 17th. Hmm. March 17th somehow higher than the 15th. 31st? I'm not gonna be able to buy these in this account. That's not so bad. Jesus fucking Christ. Balls are a bit overpriced. Alright. Rumpelstiltskin. Welcome to Zillionaires. Thank you so much, man. Hit me up on the Discord. I'll get you added to the country club after the stream. I'm so scared. I've been bag hold 3x leverage shares on Meta, Nvidia, Apple, Tesla. I'm down 30%. All of my money rests in JPow's hands now. Are you short or long? SPX 4100 end of week. 4100 is actually not out of the question right now. It's a little unlikely given the current positioning, but yeah, it's not out of the question. I got a SPY strangle, $3 out of the money for March 17th. Let's get it. Fucking A. That's actually not bad. I wonder if SPY is cheaper. The IV's a little better. Huh. Yeah, it's not bad. I could buy this on here. All right. SPX 4100 end of week. Okay, I answered that. Thoughts on Dole? Have you seen the 6-month this morning? No, I didn't. I haven't looked at Dole in a few days. What's it doing? SQQ's still up. Dole. I mean, they kind of kicked ass on earnings, which means I'm still never gonna get a buy-in unless the market crashes. Look at them making money. Looking pineapples. Imagine shorting FSLR if it gets back to its '08 high of 317. Eh. Imagine not shorting it, it goes back to 100. Gork, when NVIDIA AI die? We'll see. The hype is still fresh. Yeah, Dole had earnings. I didn't see the guidance. Odds of 50-cent hike increase over 2 points day by day, FYI. Oh, up 2 points? I mean, if fucking inflation comes in hot a third time, they're probably gonna do 50, right? Do you think we get volatility from JPOW then chop until he speaks again tomorrow? Or do you think the market picks a direction today? I mean, that'll reduce by 2 points day over day. Okay. Um, market picks a direction today. I doubt the market will pick a direction today. Not only do we have Powell's testimonies today and tomorrow, we have jobs data through the end of the week, and then CPI, PPI next week. What if JPOW comes in with clown makeup on? That would be amazing. So the market took 2022 off from most pump and dumps, just enough for most people to forget. Then 2023 comes and it's time to have a super pump and dump of AI. I mean, it's kind of a desperate reach to pump future earnings potential with a technology that's not fully ready to go to market. At least that's what it appears to be. How can we tell if the market crashed or is crashing? Didn't we kind of crash since highs in 2021? We're down significantly from the highs of 2021, but I wouldn't say, and we came very close to crashing a couple times during 2021, but we didn't. Generally, crashes are defined by like little halts to the downside on major indices. Haven't seen one of those since 2020. JPOW comes in with clown makeup on and says, I'm the VIX now. I love that they included the VIX in their report. They're like, looks fine. They expect the effects of. That's not entirely accurate, Irish Cowboy GPT. Um, they expect the effects of rate increases to have an effect on the labor market by the middle to the end of this year. But there's still no price stability without reducing the current momentum of the labor market, which unemployment is still grinding down, available jobs are still going up, right? So even if it has a lagging effect, is it going to be enough given that the labor data is significantly better than when they started doing rate increases? I started trading right before the 2020 crash. I thought SPY was supposed to halt all the time. No. Hypothetically, if you weren't yourself and you overheld 317, 390p, would you take the L now or wait for a few speeches and reports? I'd probably just wait. You're not, I mean, you're not close to the money, but I suppose it could be worse. Oh, I heard talk about yen squeeze again this morning. Maybe the end of the year we'll see it. That'd be cool. I would like that. I'm still short short Nikkei long yen. So where are you straddled at? 40, 50? That's not super interesting yet. I bought a strangle on SPY 406, 403. Gork stonks. What happened? VXX did a reverse split today. Yep. We expect 2023 to be a year of significant decline in inflation. Yeah, so far it's just been going up though. I I also think that they're underpinning the effects of China reopening um on what is still a pretty weak supply chain. It's only just started to stabilize, right? And it's not so much the demand, right? It's going to be the competition for goods that drives prices. JP has entered the building. Oh shit. I need to see him enter. Wait, why is this not? Why are they not live on YouTube? What the fuck did he say? Was he crying? Wholesale inventories. No shit. Huh. Does he have a Volker suit on? He doesn't have any suit on. Pull it up on C-SPAN.
There are a lot.
There's nothing on
There are
C-SPAN.
a lot.
Kirk's charts are misleading. It's only 20 BPS. I'm waiting for it to pop up. It's There's still no video here. Did bulls just get blown up? Wholesale inventories month over month was pretty bad. Used vehicle index is up. That's about it. Video's up. No, it's not. If I'm reading this right, JPA's written statement makes reference to increasing the pace of rate hikes being possible.
Buyback plans.
Oh, here we
Does
go.
it look like corporations have exhausted every available alternative? It's so brazen. Even global bankers called on the Fed to identify this profiteering is one of the biggest drivers of inflation. Paul Donovan, chief economist of global wealth management at UBS, wrote, "The Fed should make clear that raising profit margins are spurring inflation. Companies have passed higher costs on to consumers, but they've also taken advantage of circumstances to expand profit margins. The broadening of inflation beyond commodity prices is more profit margin expansion than wage cost pressures." Think about that. From a chief economist at UBS, I'll say it again, they've taken advantage. These companies have taken advantage of circumstances to expand profit margins. The broadening of inflation beyond commodity prices is more profit margin expansion than wage cost pressures, unquote. The Fed, understandably, the Fed can't force corporations to change their ways or rewrite the Wall Street business model on its own, but the Fed can talk about it. High interest rates, falling wages, increasing unemployment are all hallmarks of failed policies that end up helping Wall Street, the largest corporations in the country, the wealthiest people in the country. Because let's be clear what we're talking about when people use the economic speak that can cloud this conversation. Cooling the economy means laying off workers. Lowering demand means workers get fewer raises. Of course, there are times when the Fed must
Sorry,
act.
hold on, I'm
We
checking.
can't allow inflation to become entrenched. We've seen encouraging trends. That isn't happening.
So
And there are
many
other
puts,
ways we can
holy
bring
shit.
prices down instead of lowering demand. Again, making people poor, laying people off, denying worker raises. We can speed up and strengthen our supply chains. We can bring critical manufacturing back to the U.S. We can rebuild our infrastructure. It's what we're doing with the CHIPS Act, with the Inflation Reduction Act, with the bipartisan infrastructure bill. For the first time in decades, we're finally recognizing the damage that I and many of my colleagues warned the corporate offshoring would do to our economy. Look at East Palestine, Ohio, a community that Senator Vance and I have visited a number of times recently. America learned about this small town last month when a Norfolk Southern train derailed and spewed hazardous material into this community. East Palestine is more than just a disaster headline. Columbiana County was once the center of American ceramics manufacturing, at one time producing 80% of ceramics of dishware in this country. One county produced 80% of it. When I was there last week, I was talking to the sheriff at the 1820 Candle Company. He was talking about how the last one closed just a few years back. Like so many industries, these jobs moved overseas, and we know why. The same reason Norfolk Southern cuts cost at the expense of safety, eliminating one third of its workforce in the last 10 years. Then you're surprised with these derailments? It's the same reason corporations now keep prices high even as supply chains stabilize. It's the Wall Street business model. Chair Powell knows that. I know that. My Republican colleagues and Democratic colleagues know that. It's a Wall Street business model. Quarter after quarter, corporations are expected to cut costs at any cost. They skimp on safety. They move production overseas to countries where they can pay workers less because of trade deals that they lobbied for. And Wall Street demands they post profit increases, even in the middle of a global pandemic. That's the problem with our economy. And not only will higher interest rates not solve it, if they're overdone, they'll make it worse. We can't risk undermining one of the successes of our current economy. For the first time in decades, workers are finally starting to get a little power in this economy. Unemployment's at a historic low, 3.4%. That's not just a number. That means Americans have more opportunities, more options, even in places that haven't seen a lot in recent years. It means people have the power to demand raises and retirement security and paid sick days and some control over their schedules. It means more Americans have the dignity that comes with a good job that provides for your family. We must here ensure that all Americans have the opportunity for that dignity of work. It's a critical time. The consequences of missteps could be severe. Mr. Chairman, two more things that affect your job. It's not just monetary policy that threatens American pocketbooks. Some of my colleagues have threatened the nation's full of faith and credit by holding the debt ceiling hostage for partisan politics. Instead of paying our bills on time, they're essentially threatening all Americans. The Fifth Circuit's Consumer Financial Protection Bureau ruling could also cause unimaginable instability and chaos for families, for consumers, but also, as the chair knows, for a financial system. The Fifth Circuit is Wall Street's, no doubt about it, the Fifth Circuit is Wall Street's favorite courthouse. It recently ruled the CFPB's independent funding is unconstitutional. If the Supreme Court upholds the Fifth Circuit's ruling, it will not only devastate CFPB, it will threaten the independent funding of many other federal agencies, including the Federal Reserve. I look forward to today's hearing, how the Fed will balance its dual mandate and continue to promote an economy where everyone who wants a good job can find one, an economy that works for everyone. Senator Scott. Sorry.
Sorry. Good morning, Chairman Powell. Sitting here, looking at my prepared remarks, thinking about, there's an opening coming where Vice Chairman Brainer's moving on. I think it's really important for us to make sure that all the information that we need
and you're over 4%.
Make a good decision on the next nom that we have in a timely fashion. So I would really implore the chair to make sure that happens, that every question, every questionnaire that is asked from the person, we get. Every member of this committee has their questions answered in a timely fashion, and that the staff has their answers in a timely fashion. Listening to Chairman Brown, I thought to myself, fascinating, truly fascinating. I concluded that, well, I know Chairman Brown pretty well. I am sure
VIX
he is sincere in his rant.
VIX is at
19.27
right now.
Spending and printing trillions of dollars, caving to the radical left in this country, seeing policies posited and then implemented that led to the worst inflation in 40 years, seeing our inflation at 9.1%, seeing American families struggle because of the weight of the government on their shoulders, seeing the devastation from South Carolina to Ohio. It's unbelievable that the progressives in this country who caused a 9.1% inflation would then turn somewhere besides in the mirror to see the absolute devastation caused by their out-of-control spending is remarkable. Remarkable. To stop the out-of-control inflation caused by the out-of-control spending, the Fed steps in to cool the economy. Well, the definition of cooling the economy is necessary because we've seen the most radical approach to a problem that was in our rearview mirror being used as a Trojan horse to bring in
You gotta ignore the
a level of
grandstanding.
socialism and
It's gonna come from
spending
both
that our
sides,
nation
don't
has
worry.
not seen in my lifetime. The facts are very simple. When you get to 9.1% inflation in this nation, as a kid who grew up in a single-parent household, mired in poverty, a 40% today, 100% just a year ago increase in the gas prices devastates single mothers around this country. For seniors on fixed income, whose savings are being depleted with an average cost just last month of a $433 increase because of inflation. For my friends on the other side of the aisle to look any place besides a mirror, I find stunning. The truth is that when your food prices go up over 20%, when your electricity is up over 20%, you have to ask yourself, where in the world are they? They cannot be in this universe. It must be an alternate universe where, in fact, it's okay for us to see prices go through the roof and our economy not stumble, but fall into a ditch. Why are we in the ditch? Because progressives used the pandemic as a way to usher in a form of spending that takes the money out of the pockets of everyday Americans and puts it in the coffers of the government. There is a better way. The better way is to trust the American people. And when you do so, we don't have to have the Fed come in and raise interest rates so high to quell the challenges in our economy so that today versus 18 months ago, the price of the same house for your mortgage payment is twice as high.
Shame on annuity buyers.
Because of the runaway spending of our friends on the other side of the aisle. I'm sure I do not have time for my opening comments, but I will say without any question, as I look around the country and I ask myself,
This guy should be promoting this
devastating
hot single
is it
mothers in your area, not
that today it
downtroding them.
costs
They could use that
$433
OnlyFans
more
support.
dollars
I know.
than it did a year ago. The
It's
answer
disgraceful.
is it is a crisis. When the average family in our country just a couple of years ago didn't have $400 in their savings for an emergency, to have prices go up by this amount, it's devastating. To have a conversation about rents around the country, looking at the inflationary effect.
JPA's speech infers that they will raise rates beyond the current
snarling
terminal
supply chain
projection. So
we haven't seen
that
in my
and
lifetime,
wholesale inventory
run by
is
my
came
friends in
in
the
real
progressives.
bad.
Unbelievable. But to get to you, Chairman Powell, one of the comments that you've made that I think is really important in one of the speeches you gave in January, and I apologize for my rant. I just wanted to make sure my rant was consistent with my friend here. It is essential, you said, that
It
we
wasn't
stick
quite
to
as
our
good a
statutory
speech.
goals and authorities.
It was also
and that we resist the
factually
temptation
incorrect on
to
some
broaden
points,
our
but
scope
all
to
right.
address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case of our independence. You further noted that, and I quote, without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools to promote a greener economy or to achieve other climate-based goals. We are not and will not be a climate policy maker. Do you still stand by those comments?
I do.
Thank you. Finally, I know we're not in the question. I know, I get it.
Purple.
Finally,
You now have 4 minutes and 12 seconds.
yes, I knew the chairman would dock that from my time, and I appreciate you doing so
With a sense of humor.
with a great humor. Great humor. Finally, several of my Republican colleagues and I sent a letter to you discussing Vice Chair Supervisor.
Glasses
Vice
are
Chair
on the
Supervision
table. I know.
Michael Barr's plan to conduct a holistic review of capital standards. I look forward to discussing those capital standards during my Q&A, and I will thank you for our recent conversation that we had that helped illuminate some of the necessary challenges that we face as a nation and your answers to it. Thank you, Mr. Chairman.
Thank you. Speaking of illuminating, thank you, Senator Scott.
Yes, sir.
I
Thank you for allowing me to use this.
Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on monetary policy in the state of our economy. And I don't expect Chair Powell to weigh in on the mini debate we just had, but I think we all know that the debt increase was much larger under President Trump and a Republican Senate than it has been since. Chair Powell, thank you for your service and your testimony today.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual
Jerome!
monetary policy report.
In the fucking
My
house.
colleagues and I are acutely aware that high inflation is causing significant hardship, and
Yeah,
we're strongly
it's
committed
fucked.
to returning inflation to our 2% goal.
Of course you are.
Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I'll review the current
labor's still
economic
fucked.
situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago.
Oh, shit's overpriced.
Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still,
How dare
the
you,
breadth
steak
of the
sauce?
reversal, along with revisions to the previous quarter,
I recently started
suggests that
shoplifting.
inflationary
Congratulations,
pressures are
Tanksibus.
running
I'm glad you
higher
found
than
a career.
expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's
Yeah,
long-run
I
objective
turned him
of
up a
2%.
touch.
The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there's little sign of disinflation thus far in the category of core services,
Oh, no.
excluding housing, a category that accounts for
He's
more
pulling
than
back
half
his
of core
disinflation speech.
consumer expenditures.
Where are the
To
bulls?
restore price
Hey,
stability,
bulls.
we'll need to see lower inflation in this sector, and there will very likely be some softening in the labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not
This is the
eroded by
current
inflation.
gamma on SPX.
Turning to growth. The U.S. economy has slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%.
So we're a bit mired in
Although
puts
consumer
right
spending
now.
appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates.
Yeah,
and
but it's
slower
fun to keep it
output growth
going,
also
Irish
appear to
cowboy.
be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remained very strong in January, while the supply of labor has continued to lag.
Ooh.
As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March,
How's that
while
bullish?
unemployment insurance claims have remained near historical lows. Turning to monetary policy. With inflation well above our longer-run goal of 2%, and with the labor market remaining extremely tight,
He's gonna stay
the
extra
FOMC has
dovish
continued to tighten the stance of monetary
these 2
policy,
days because he's trying to defend and
raising interest
justify his
rates by
policies
4.5
and
percentage
job.
points
Just
over
my
the past
opinion.
year.
I mean,
We
his
continue
initial
to
statements
anticipate
weren't
that
very
ongoing
dovish.
increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
Yeah.
If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well.
Second time I've heard him say higher rates.
Restoring price
Yep.
stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chair. There are 23 of us on this committee. Almost everyone will be here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you. Job growth is strong as unemployment remains historically low. You might not know that from the opening statements. Many drivers of inflation, corporate greed, rising inequality, supply chain disruptions, Russia's bestiality, if you will, in Ukraine, won't get better because of interest rate increases. Every indication is that this post-pandemic economy is different. Should we be worried, Mr. Chair, that the Fed is treating this economic period as it has in the past instead of reacting differently?
Thank you, Mr. Chairman. So we've been aware since the very beginning and have discussed this publicly on many occasions that there are some differences this time. We, in particular, have not seen the kind of supply side collapse that we saw.
Some
at the very
puts
beginning
took
of the
profit,
inflation
it looks
outbreak.
like.
Also, the outbreak of a war, which had significant effects on
40s.
commodity prices a year ago.
Dropped
so all
a little
that is
bit.
different. There are also, though, some similarities.
Probably just
There is a
repositioning.
mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every opening, for every unemployed person. So we're well aware that
He said
this
bestiality.
particular situation involves a mix of cycles of forces, not all of which our tools can affect. But there is a job here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation, and our conversations in the past show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next question. Last year, 3 banking regulators issued proposed updates on the Community Reinvestment Act to account for changes in our banking system. My question is, does the Fed remain committed to work with FDIC and OCC to finalize a CRA rule, and when will that rule likely be finalized?
Yes, we do remain committed, and I believe we are in broad agreement with the other 2 agencies on the revisions to the rule. So now we're in the process of writing all that down, and that'll take some time. And then after that, of course, it will come to the Board of Governors for a vote, and that'll involve briefings and discussions. And I can't give you an exact date, but
as quickly as possible.
Yes, but it will be some months.
Okay, thank you. Banks weathered the shock of the COVID-19 shutdowns mostly because of the fiscal response provided by Congress. We now see a spike in loan delinquencies, an increase in overall risk. Banks are again plowing billions, as many other corporate leaders, always defended by people on that side of the aisle, into stock buybacks, which makes me concerned that there's a downturn in the economy. Banks could end up with too little capital. That's why I'm worried about any potential rollbacks of safeguards or regulations. Can you assure me that the Fed will keep capital requirements strong and exercise more long-term forward thinking than corporate CEOs that seem to be focused on the short term?
I can assure you as to the first part that we'll keep capital requirements strong.
Sorry,
I didn't expect you to comment on give me an opinion about you're looking more forward than companies that look at the short-term benefits of stock buybacks.
Holy shit.
Mr. Chair, when you last testified, I asked about the risk posed by
4010,
crypto assets,
4000,
stablecoin,
way
the
up.
Fed, and other regulated
Puts
possibilities.
coming
How's
in
the
all the
Fed
way down to
evaluating the risks of
3,900.
crypto-related activities by your
a
supervised
little much, but-
institutions?
And the money
So
puts
this is
coming in
something
as well.
we've been quite active in this area, and I'll say that we believe that innovation is very important over time to the economy. We don't want to stifle innovation. We don't want regulation to stifle innovation in a way that just favors incumbents and that kind of thing. But like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk. Lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care in the ways that they engage with the with the whole crypto space, and that they give us prior notice. And
Zero
we've
DTE.
issued, along with the FDIC and the OCC, a number of
I'll write it down because it's hard to hear me.
issuances of notices to that effect.
Thank you, and I will close with this. I've long pushed for the Fed to prioritize workers and for the leaders of the Fed to reflect the diversity of our country. We've made progress, but our work is not done. We have a new opening. Understand, it's not your job to appoint the new Fed member. We have a number of upcoming vacancies at the Reserve Banks. I support Senator Reid from Rhode Island, Senator Menendez from New Jersey, and other colleagues who are pushing for more diverse voices at the Fed. Senator Scott.
Thank you, Chairman. Obviously, the chairman and I both have strong passions about the challenges that we face as a country. The one thing that I do believe that we agree on is the importance of having a strong capital markets as it relates to making sure that Americans have the ability to continue to grow their businesses and to solve their challenges.
No
Frankly,
space.
I hope that we get there. Building on the same
Other
comment
way.
that
Negative
Chairman had on
gamma.
capital standards is where I'm going to go with my thoughts today. When I think back on these last few years, it's hard not to recognize the extraordinary efforts our financial institutions of all sizes, frankly, undertook to administer.
Do I need to write it
program
in
like
red
PPP,
so people
all
understand?
while weathering a shutdown of our global economy? I welcome your thoughts, but from my viewpoint, our banking system was resilient. Our financial institutions stepped up and delivered aid to support families and businesses every single day.
I just stepped on
That's
the
why
VIX again.
Vice Chair Barr's broad comments around holistic review of our capital trouble me so much. We should be laser focused on our economy
VIX expired
and addressing
today,
the needs of
Thomas.
everyday Americans trying to
Weeklies.
forge a new future and helping them open the door to opportunity. As you and I both know, capital and its quality must be continually scrutinized,
Fair.
but increased capital does not necessarily provide an increased benefit, and requiring banks to hold capital that is not risk-based and appropriately tailored to a bank's size, scope, and activities can cause more harm than good. At a time of record inflation, where everyday needs are more expensive, we should not be pursuing actions that are harmful. Rather, we should be supporting the engine of our economy, small businesses. While I remain greatly concerned by the Vice Chair's comments, I am hopeful that you will ensure this review is appropriate, keeping the impacts on our banking system front and center. We must promote and further the growth of our economy and thereby our people. Anything less should be unacceptable. To that end, will you commit that any ongoing capital review by the Federal Reserve will follow the law and that any follow-on regulatory proposals will be risk-based and tailored to an institution's activity, size, and complexity, and not a one-size-fits-all?
Yes, I can easily commit to that. You know, we're very strongly committed to tailoring, and that'll be, I can say that anything we do will reflect tailoring, which is a long-held principle for us and also now a requirement in the law.
Yes, sir. Thank you very much. 2 weeks ago, I sent a letter with Chairman McHenry to Chair Gensler regarding the SEC's climate disclosure rule, urging him to rescind his proposal and reminding him that the SEC is a market regulator, not a climate forecaster. Much like Congress designed the SEC to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation, and not to advance progressive climate change policies, Congress designed the Federal Reserve to promote price stability and maximum employment, not to play politics. To that end, I find worrying the Fed's announcement of recent actions to consider climate-related scenarios, coupled with remarks by the Vice Chair of Supervision, as attempts to incorporate broader ESG policies into the financial services system. Banks have and continue to account for weather-related
looks like
risks
repositioning
in
a
their
little
risk
bit.
management. But efforts that attempt to predict climate change far into the future fall outside the scope of their authority. Importantly, the level of speculation required in these models should highlight their arbitrary and capricious nature. At a time when our economy is suffering from historically high inflation, I expect our central bank to focus its time and resources on bringing inflation down, not on policy outside of its mandate. I noted in my opening statement a recent speech that you've given about the state of the Fed and how you should resist the temptation to broaden its scope and to address social issues. Do you agree that the Federal Reserve does not have the authority or statutory direction to use its monetary policy or supervisory tools to wade into the ESG or other climate policies?
I do. As you know, there's a tightly focused role that we do have that I believe that we have, but I would agree with your statement.
Yeah. Mr. Chairman, I have 20 seconds left, but I'm going to defer because of my earlier question to my opening statement.
Thank you, Senator Scott. Senator Menendez is close, but not here yet. So, Senator Rounds.
Oh, okay.
So, but nice try.
Yes, sir. Just want to make sure whatever you say.
Thank you, Mr. Chairman. Mr. Chairman, first of all, welcome. It's always good to have you in front of our committee. And as you know, both core and headline inflation have remained persistently elevated. And over the past 12 months, real average hourly earnings fell by 1.8%, about 4% since President Biden took office. To make ends meet as prices increase, more Americans are leaning on credit cards. At the end of 2022, credit card debt hit a record of $930.6 billion, an 18.5% spike from a year earlier, and an average credit card balance rose to $5,805. Over the past year, the Fed has acted aggressively to tame inflation, and yet we are still seeing price increases. And as we've discussed this several times, but I recognize that it's been an ongoing discussion, but I believe that this further proves that we have long been feeling the effects of a policy-induced inflation resulting from decisions by the Biden administration, primarily cutting off the resources necessary to improve and increase domestic energy production. I continue to be concerned that if you attempt to use the tools that are available at this time for the Fed, then I believe that we're going to have a challenge of not being able to address specifically the challenges brought out when you have a policy is promoting higher prices with regard to energy.
This seems a bit volatile.
As
Why
opposed to what
VIX
you're trying to do,
down?
which is to bring down the total overall cost. And I just wanted to ask, I guess, and you're going to think this is something that we've heard before, but do you believe that you currently have the monetary policy tools to actually reduce inflation? And I just put it in this perspective. In January of 2021, the CPI was 1.4% when the Biden administration began. In January of 2022, and this is before the Russian invasion of Ukraine, CPI was at 7.5%, 7.5%. Today, March of 2022, CPI is 8.5%. Wouldn't it be fair to assess that a lot of the policy or the inflation that we've seen here may very well be due to policy decisions by this administration?
Senator, not for us to point fingers. Our job is to use our tools. You asked whether we have the tools to get this job done, and we do over time. There are some things that we can't affect, but over time we can achieve 2% inflation, and we will.
In other words, you've got a limited number of tools available to you, and the limited number of tools that you have are designed to impact simply the reduction in prices and so forth, and yet if there are competing interests out there that are pushing prices higher, you don't have the wherewithal to decide one tool versus another based on whether it's policy-induced or whether it is a matter of a shortage in supplies from outside or whether it's war-related.
That's right. Our tools essentially work on demand, moderating demand, and so that's what we can do.
So if there were policies in place that actually help to reduce inflation, in other words, and by that, I'm just going to look at energy alone just as a good example. If policies were in place that were actually allowing energy prices to come down in the United States, then you would have less of a need to use the very blunt tools that you do have right now with regard to increasing rate increases. Is that a fair statement, sir?
In a sense, it is, but I would just say on energy,
I'm not trying to get you to a policy discussion with what the president's doing on his energy policy. I just want to make it clear that you have to respond to what's in front of you, and it doesn't matter where the inflation is coming from or what's driving it up. You're simply trying to bring it back down to that 2% number with the only tools that you've really got.
Yes, but I will say on energy, energy has tended over time to fluctuate up and down, and it's not mainly affected by our tools. So the things we look at are really things that are tightly linked to demand in the U.S. economy. Those we can affect. And
I think just the fact that you've been increasing interest rates, and yet inflation continues to ride up, would suggest, just as you've just indicated, that when you have high energy prices, it's tough to impact that part of it with the monetary policy that you've got available to you.
So we focus on everything, but we also focus on core in particular, which doesn't include energy prices. And what's happened is core inflation has come down, but nowhere near as fast as we might have hoped, and it has a long way to go.
Thank you. One last question. Last June, Vice Chairman of Supervision Michael Barr testified before this committee that he would defend the use of the aggregation method as an alternative approach to the insurance capital standards, the ICS, proposed by the IAIS. As the final compatibility criteria set to come out later this year, can you confirm that you share Vice Chair Barr's views on this AM?
I will confirm that, but I'll have to get back to you on the status of that.
Okay, thank you. Thank you, Mr. Chairman.
Thanks, Senator Rounds. Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I want to take this moment to remind my colleagues that there are more than 62 million Latinos that call the United States home. We are the largest minority group in the country. We account for nearly 20% of the United States population. We contribute almost $3 trillion in GDP. Yet Latinos have no representation in the Federal Reserve's leadership. In the 109-year history of the Federal
It's true.
Reserve, there has never been a single member of the Board of Governors or regional bank president who has the lived experience of being Latino in the United States. And in practice, that means that the voices of nearly 1/5 of our country's people are repeatedly drowned out when the Fed is making critical decisions on economic policy. Decisions that affect whether a Latino family can afford their first home, find a job that pays a living wage, send their children to college, save for a comfortable retirement, or get a loan to expand their business. Right now, the Biden administration has a clear opportunity to make history with its next nomination to the Board of Governors. It has identified a number of highly qualified Latino candidates who have dedicated their careers to the fields of economics, who are committed to the Fed's dual mandate, who will preserve the independence of the central bank. The administration has rightly nominated and advocated for a number of diverse candidates with similar qualifications, both at the Fed and elsewhere. But despite having 5 opportunities over the past 2 years to nominate a qualified Latino economist to serve at the Federal Reserve, this administration has repeatedly chosen not to. Representation, or lack thereof, does not happen by accident.
But I'm not
It is
Latino.
a choice, and I hope the administration makes the right choice with this nomination. Mr. Chairman, would you say that it is a truism that the United States dollar is the reserve of choice in the world?
Yes, I would.
And that brings us enormous benefits, does it not?
Yes, it does.
Now, 12 years ago, a Republican House brought us to the brink of defaulting on the debt for the first time in history of this country, jeopardizing our credit and the world economy. I'm getting a sense of deja vu because, once again, Republicans are recklessly demanding draconian spending cuts to programs that hardworking U.S. families rely on in exchange for allowing the Treasury Department to pay for spending that Congress, including most of them, have already voted to authorize. If you want to talk about spending cuts, it seems to me that the budget is the time to do that, but not to put the full faith and credit of the United States at risk. Chairman Powell, can you talk about the catastrophic damage a debt default would inflict on the economy?
So I guess I will start, if I can, by saying that these are really matters between the executive branch and Congress. We do not seek to play a role in these policy issues. But at the end of the day, there's only one solution to this problem, and that is Congress. Whatever else may happen will happen, but Congress really needs to raise the debt ceiling. That's the only way out, in a timely way that allows us to pay all of our bills when and as due. And if we fail to do so, I think that the consequences are hard to estimate, but they could be extraordinarily adverse, and could do longstanding harm.
Well, I think that's a mild statement of what would happen. I understand. I didn't ask you to engage in the congressional executive branch roles. I asked you about the abstract question of what happens if you have a debt default. Isn't even this constant fight putting into question the possibility that the United States will not honor its full faith and credit have consequences within the economy?
In principle, it could. I think markets tend and observers tend to watch this and tend to think that it will work out, and it has in the past worked out. So it needs to work out this time too.
Now, seeing your testimony before the committee, is it fair to say that you'll do whatever is necessary to tame inflation?
We serve a dual mandate, and we will do what we can, everything we can to restore price stability while also serving maximum employment.
And primarily that means additional rate increases, would it not? What other tool do you have?
That's what we have. The balance sheet, the shrinkage of the balance sheet will continue too, but it's principally rate hikes.
So the question is, when does that part of doing anything necessary to tame inflation, come into conflict with your other mandate of maximum employment?
Not now, when we have the lowest unemployment in 54 years, and where we have a labor market that is extremely tight, extremely. So, but that time could come, but it really isn't now, where we're very far from our price stability mandate, and in effect, the economy is past most estimates of maximum employment.
Thank you, Mr. Chairman.
Thanks, Senator Menendez. Senator Kennedy of Louisiana is recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Thank you to you and your team for helping to save the economy during the pandemic meltdown. For what it's worth, I'm generally supportive of the actions of the Fed right now, and I'm not going to ask you today to blame anybody. When Congress spends money, it stimulates the economy, does it not?
Well, it would depend on whether that's funded by tax increases or not. But so if there's a spending that's not accompanied by taxes would have a net at the margin stimulative effect.
Well, and when Congress borrows money to spend even more, that stimulates the economy even more, does it not?
At the margin, yeah.
Okay. If Congress reduced the rate of growth in its spending and reduced the rate of growth in its debt accumulation, it would make your job easier in reducing inflation, would it not?
I don't think fiscal policy right now is a big factor driving inflation at this moment, but it's absolutely essential that we do slow the pace of growth, particularly for the areas of the budget.
All right, let's try to unpack this then. I'm not trying to trick you. You're raising interest rates. You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the unemployment rate. Is it not?
Yes, one of the measures.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
There are a lot,
And
so there are a lot of
that mean I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels, like, for example, just job openings.
All right,
Job openings
let me
could
put it another way, okay? The Economist did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
Yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times that we got inflation down, disinflation since the 1950s, in order to reduce inflation by 2%, unemployment had to go up 3.6%. Now, that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the
Okay.
Fed has tried to reduce
Now,
inflation.
right now, the current inflation rate is 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again, blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay, and to get inflation down to 2.2%, based on history, an immutable fact,
History is
unemployment
not
would have to go to
indicative of-
10.6%.
okay.
Would it not?
No,
Not
I
an
wouldn't. I
immutable
wouldn't.
fact.
That's what the record shows. That's what the history shows.
Yeah,
You stop
I-
interrupting Powell.
I don't think
you
that
son
kind of
of a
number
bitch.
is at all in
I
play
mean,
here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt accumulation.
No.
Now,
We need to
I
subsidize
get
industry.
that you don't want to get in the middle of that fight. But the more we help on the fiscal side, the fewer people you're going to have to put out of work. Isn't that a fact?
Fuck them.
Please answer.
Could work out that way.
Sir?
It could work out that way.
Yes, sir. Thank you.
Thank you, Senator Kennedy. Senator Reed of Rhode Island is recognized.
Thank you very much, Mr. Chairman. Thank you, Chairman Powell, for being here today. We saw in the wake of COVID the globalized.
Why is no one ever
supply
honest
chain
during these things? I should be the
disrupted
Fed chair.
significantly, and we're in the process, in some respects, of rebuilding a supply chain with an emphasis on sourcing in the United States. To what extent did that disruptive supply chain contribute to inflation, and to what extent will the new, if you envision it, the new supply chain that is located in the United States and other friendly countries affect inflation?
So the initial outbreak of inflation was all about spending on goods where people couldn't spend on services. So goods spending went way up, and the global supply chain, many goods are imported. The global supply chain just collapsed, and that was the source of the original inflation. It has now spread over the last 2 years to housing and also to the rest of the service sector. So to your question, we are seeing goods inflation has been coming down for some time now. It's still too high, but it's coming down. Housing services there's in the pipeline. You see the new leases that are being signed, and what that tells you is that in the next 6 to 12 months, we will see that come down. But this big service sector that's everything else, which is financial services, medical services, travel and leisure, all of those things, that's really where that's the source of the inflation we have now, which had nothing to do with the supply, or not much to do with the supply chains. That's where the challenge is now.
And is there anything that you can do that would target that service area without affecting the other areas?
There's not really. You know, our monetary policy tools are famously
Dick's almost back to
powerful
19.
but blunt.
A different topic, and that is, as you're probably aware, the Fifth Circuit delivered a ruling in the Community Financial Services Association versus CFPB that the CFPB's funding mechanism is unconstitutional. Just like the Board of Governors, the CFPB is a bureau of the Federal Reserve. Both the Board of Governors and the CFPB rely on the same source of funds and draw on those funds in virtually identical ways. If the Board of Governors funding structure would be found unconstitutional, what would the implications be for the country and monetary policy?
Well, it would be very significant, but I have to say we have significant responsibilities, but I would be reluctant to comment on a case that's before the Supreme Court.
But it is certainly something that you've had people examine for possible ramifications.
Yes, and you know the central banks tend to be self-funding because of the way they work, and that's a key factor of our independence.
We've gone back and forth on the impact of rate hikes on workers, and you've indicated previously that wages have not been spiraling upwards necessarily, and that inflation expectations are currently stable. But the impact on increased interest rates are usually felt more by low to moderate income people. Is there any way you can work yourself out of that dilemma?
So where we are right now, of course, is very low unemployment. Wages have been moderating, and they've been doing so without a softening in the labor market, without a rising unemployment, really, and that's a good thing. So we really don't know. The current situation is a combination of more typical supply and demand issues, but also just things that we haven't seen before, like the war in Ukraine, like the supply chains that you mentioned.
Right.
So we have many unusual factors, and I don't think anybody knows with confidence how this is going to play out.
Thank you very much, Mr. Chairman. Thank you, Chairman.
Thanks, Senator Reed. Senator Brett, Alabama is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's great to have you here today. Over the past 2 years, we've seen the highest inflation of my lifetime, driving up costs for American families across the board. According to the U.S. Department of Labor, the annual inflation rate in 2021 was 7%. And in 2022, it was 6.5%. According to the U.S. Department of Agriculture, the cost of food went up 10% in 2022. And the real effects of that is moms and dads across this nation that are working to put food on the table for their kids, for their babies, had a harder time doing that. This has devastated hardworking Americans, causing a kitchen table crisis in every corner of our country, as the price of food, energy, and housing have all skyrocketed. In response, the Federal Reserve has raised the Federal Reserve Fund rate more than 4 percentage points. Being far from transient, inflation has remained persistent, high, and well above the Fed's long-run goal of remaining under 2%. In the coming year, what factors and indicators are you paying attention to as you and the Federal Open Market Committee decide on whether to increase rates?
So I'd say a couple things to that. First, we're going to be looking at inflation in the three sectors that I mentioned: the goods sector, the housing sector, and then the broader service sector. And we need the inflation that's already underway in the goods sector to continue, and that's really important. In the housing sector, we just need the time to pass so that reported inflation comes down, and it's effectively in the pipeline as long as new leases are being signed at relatively small increases. So we'll be watching very, very carefully, though, at the larger service sector, which is 56% of consumer spending, and more than that of what's currently inflation. So that's one thing we'll be watching that very carefully. Also, we raised rates very quickly last year, and we know that monetary policy, tightening policy, has delayed effects. It takes a while for the full effects to be seen in economic activity and inflation. So we're watching carefully to see those effects come into play. So we're aware that we haven't seen the full effects yet, and we're taking that into account as we think about rate hikes.
So when you're looking at this, obviously not to get into a policy discussion, but if there were an increase of energy production in this country, do you feel like that would help drive down inflation?
Well, I think over time, more energy would mean lower energy prices. But we are very focused on what we call core inflation, because that is what is driven by, really by demand, and our tools are really aimed at demand.
Right, understood. But I feel like the cost of energy is not just what you pay at the pump. It ends up affecting every good across this great nation. Additionally, I'd like to ask you about labor participation. So when you look at the unemployment rate, and we've heard my colleagues discuss people having to be displaced in order for us to maybe get to the inflation rate that we would like as a nation, I'd like to focus on the labor participation rate. So right now it's 62.4%. If there were an increase in people coming back into the workforce, would that be a positive factor with regards to driving us down to the 2% rate that you would want to achieve?
I think that it would. I mean, remember those people coming into jobs. Yes. That would be great, because the economy clearly wants more people than are currently working. Of course, those people would then spend more, so it wouldn't be a zero-sum game. But it would be great for the country and great for them if they were to come into the labor force.
Amen. I believe that increasing in capital requirements on financial institutions would have a chilling effect on the economy and the availability of financial services. And last week, I joined many of my colleagues in sending you a letter that expressed concerns that if the Federal Reserve decides to conduct a, quote, holistic review of capital standards, as we heard Senator Scott talk about earlier. So is the Federal Reserve concerned that the impact to the economy of increasing capital requirements on financial institutions at a time when inflation remains persistently high would cause an issue?
So I think it's always a balance. We know that higher capital makes banks safer and sounder. We also know that you will, at the margin, provide less credit the more capital you have to have. But I think it's never exactly clear that you're at the perfect equilibrium, and it's a fair question, I think, to look at that.
And I know out of respect for the chairman and trying to stay in my time, I will just end by saying I heard what you said. Obviously, as you have said, the Federal Reserve is not and will not be a climate policymaker. I just want to thank you for your public statement on that. I agree with you that there's a difference between policymakers and financial regulators, and certainly look forward to working with you in the future.
Thanks, Senator Brett. Senator
okay.
from Virginia is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you again. Let me start by saying, depending on who's asking questions, we're either pounding you for how quickly we're going to drive that inflation back to 2%, or pounding you on making sure that we don't push the economy into a recession and drive up unemployment. I got to tell you, and it's these are maybe not the cheap seats, but I actually think you've done a pretty good job in terms of both ratcheting up rates and then starting to tail off a little bit. I think we all were concerned by the January numbers where it popped up a little bit more. I wish, Mr. Chairman, we were actually having this hearing 2 weeks from now, because we're going to have a lot more data later in this week and next week. But I want to net. We've still got ways to go, and the January numbers were concerning. But I do think your tailored approach, we can all second guess, but I think it has been the right approach. And I want to commend you on that. I want to get two questions in. One of the areas that I am very worried about is commercial debt. I mean, we've got a Bloomberg story here showing, we're going to hit a $6 trillion wall this year on refinancing. Where I'm particularly concerned.
How much money did you make in these 30 minutes? I'm just grinding out contracts over here.
As we recover from COVID, a lot of things are getting back to normal, but clearly the transformation of where people work is going through a fundamental transition, and I hope people do return more to the office, but lots of folks prefer working elsewhere. That's going to fundamentally change the real estate market on the commercial side, and I do believe we're going to hit potentially a cliff here of a totally unexpected problem in terms of
turn the cubicles into
real estate.
bedrooms.
How are you
Problem
looking
solved.
at that issue and recognizing there's lots of bumps coming out of COVID? This one seems to be more unique in nature, and how are you thinking about that issue?
So the first one on commercial debt, business debt generally, it's kind of been moving sideways as a percent of GDP. So you don't see a big spike going on or anything like that. However, of course, there are pockets of concern, and particularly you pointed to the refinancing spike that has to happen, and I've seen those come and go before. Generally, markets can absorb them, maybe at a much higher rate this time, but it's something that we're well aware of and watching carefully. In terms of CRE, I would agree with you. The occupancy of office space in many major cities is just remarkably low, and you wonder how that can be. Now, over time, some of that's going to be made into condominiums and things like that, since we don't seem to have quite enough housing in some places. But the question is, what's the financial stability risk? It's not great for the largest institutions. Don't tend to have a lot of direct exposure to that. Some smaller banks actually do. Medium and small size banks do. We carefully monitor it. We agree that that's an area that requires a lot of monitoring, and I'd say we're on the case.
I don't know if the downside's running out of steam. Just small bounce back.
Last question, something we've talked about with a lot of my colleagues.
Maybe just a reversion back to like 40-26 right now.
The large institutions,
that's what I'm trying to
think,
capture if I don't get stopped out.
Of Dodd-Frank, I think would acknowledge our banking system.
It may fail at 2017.
Stronger.
So what I'll do is I'll bump my stop as we approach.
In a very healthy way.
Like kind of the gap in the contract here.
Evolve is a vast amount of financial institutions move beyond the regulatory perimeter. The fact that we now have way over half of the mortgage origination coming from non-financing institutions, because a lot of the large
sooner,
entities,
I guess. This isn't good. Like
hedge funds, other funds that may be doing some of this commercial debt or some of the CRE debt. I'd like you to talk generally in the last 40 seconds or so of how you think about this regulatory perimeter. I'm a big believer, and some of my colleagues are, that
that's not that bad,
that we ought to look less at charter and look at same risk, same regulation, maybe as a guiding principle. And I know Senator Warren's been working on some work. I've been working on some work around crypto around that area. But there's a vast amount of activity that's taking place outside the regulatory perimeter. How should we be thinking about that, and how do we make sure that doesn't create the kind of crisis sneak up that happened in 2008 on the non-regulated side of the house?
I think you articulated the principle very well. It's same activity, same regulation, and that covers crypto and all kinds of other activities. People are going to assume when they deal with something that looks like a money market fund that it has the same regulation as a money market fund or a bank deposit. And so stable coins need some attention in that respect. I just think that's the basic principle. And you're right, so much of intermediation has moved away from the regulated banks really for a long period of time. And we got to keep an eye on that.
Mr.
Thank
Chairman,
you,
I
Chair
hope this is
Powell.
something we can keep looking at. I hope it's.
Thank you, Senator Vance. I'm sorry, Senator Haggerty of Tennessee.
Thank you, Chairman Brown, and thank you very much, Ranking Member Scott, for holding this hearing. Chairman, it's great to see you again here. I appreciate your presence, and I appreciate the opportunity to talk with you about an item that I'm particularly concerned about, and that's the holistic review that Senator Britt just brought up that Vice Chair Bauer is conducting right now. It's generating a sense that higher capital requirements are on the horizon for us. And as I think about that in the context of what we've weathered, you think about the situation in 2020. It was an acute, real-life stress test, if you will. And I think that our financial system navigated that admirably. In the past, Chair Powell, you've told this committee that our financial system has proven resilient through 2020 and that the capital levels at that point in time, and I would note that those capital levels are at multi-decade highs, are in aggregate adequate. And I just wanted to follow up on those prior statements and see if you still feel that way.
US 2 to 10 conversion reaches 1
I
percentage
guess I would
point.
say it to you this way.
That's a big deal.
In our system, we have a vice chair for supervision who has statutory
We're
responsibilities.
going to crypto around
when a new
that.
Vice chair for supervision comes in, generally they're going to want to take a fresh look. That's what the former one.
Still holding your
Vice Chair
317
Quarles
straddle
did, and
both
that's,
sides. Yeah.
Dan Cerullo kind of had the job on it on an informal basis, and that's what he did. So it's only natural that someone would come in and take a fresh look, and I think that's part of the process. The role of that person is to make recommendations on regulation and supervision to the full board. The role of the board is to consider those when made, and this, to me, this just comes under that heading.
Well, as the review is underway, and I appreciate that context, one aspect of it seems to us as an apparent willingness to undo the tailoring requirements that were enacted as part of S2155. And I understand that nothing has been finalized regarding the regulations. It's a concerning prospect if that's the case. The Fed's General Counsel just yesterday
VIX looks like it's going
alluded
to pop
to
above
undoing
19 again here.
2155 by, quote, pushing down the Basel requirements on banks that were intentionally given relief in that bill. So I want to be perfectly clear that the banking regulators themselves can't just simply ignore or selectively enforce the laws. And again, I realize that the details of the study haven't been finalized and made public, but if the proposal put forth by Vice Chair Barr is either unduly aggressive or appears to contradict the spirit of S2155, will you vote for it?
I can't answer that in the abstract, of course, but I would say we're, as an institution, very strongly committed to tailoring, and anything we do is going to reflect, tailoring of institutions according to their risk, and I mean that's a principle that we'll stick with.
I think it's quite important, again, given the legislative intent here and the concerns that we maintain that in the face of what General Counsel said just yesterday. I appreciate your perspective in terms of keeping that in place. I'd like to come with my next question, Chairman Powell, with starting the question by underscoring the importance of the independence of the Fed's monetary policy. Right now, the economic picture is about as uncertain as I can remember. We've had large companies in the private sector who are in the midst of planning layoffs and forecasting serious economic weakness in the quarters to come. Yet, on the other hand, the current economic data seems to be robust. Inflation showed some signs of softening in the past several releases. So I just hope, Chair Powell, that you could briefly tell us how you synthesize these seemingly contradictory data.
So just quickly, at the end of last year, we saw a couple of very promising, modest inflationary readings in November and December. But earlier this year, some of that improvement was revised away. In addition, we got a very strong reading on inflation in January, also a very strong jobs reading, also very strong retail sales. And so, as I pointed out in my testimony, we're looking at a reversal, really, of what we thought we were seeing to some extent, a partial reversal. It's still true. It's still the case that we're seeing progress on inflation. We're seeing goods inflation has come down significantly. There's improvement in housing inflation in the pipeline. There's not a lot of improvement yet to be seen in the largest sector, which is non-housing services. So core inflation is running at 4.7% on a 12-month basis. I think nothing about the data suggests to me that we've tightened too much. Indeed, it suggests that we still have work to do.
In that context, thinking about where the tightening goes and when it might, where and when it might happen, where do you see the terminal Fed funds rate landing in this cycle?
So we last wrote down our assessments, individual assessments of that in December, and I think the median range was, basically people were clustered between 5 and 5.5. We're going to write down those again as part of them. We do it 4 times a year. We'll do it around the March meeting, which is on the 21st and 22nd of March. And as I indicated in my testimony, I think the data we've seen so far, and we still have other data to see, we still have significant data to see before the meeting, suggests that the ultimate rate that we write down may well be higher than what we wrote down in December.
Got it. Thank you, Mr. Chairman.
Thank you.
Thank you.
Thank you, Mr. Chairman. So the Fed has raised interest rates 8 times over the last year in what has been the most extreme rate hike cycle in 40 years. The Fed's goal is to slow inflation, and your tool, raising interest rates, is designed to slow the economy and throw people out of work. So far, you haven't tipped the economy into recession, but you haven't brought inflation entirely under control either. And maybe the reason for that is that other things are also keeping prices high, things you can't fix with high interest rates, things like price gouging and supply chain kinks and a war in Ukraine. But you are determined to continue to raise interest rates, so I want to take a look at where you're headed. In December, the Fed released its projections on the state of the economy under your monetary policy plan. According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an
just a math
intended
problem.
consequence. It's
Well,
not,
but it is, and it's in your report, and that would be about 2 million people who would lose their jobs, people who are working right now, making their mortgages. So, Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it?
Well, will working people be better off if we just walk away from our jobs and inflation remains 5-6%?
Let me ask you about what happens if you do this. Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking at
infrequent.
the numbers, it actually is pretty black
Alan
and
Blinder's
white.
written a book on this, and
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right. So then the question becomes, we've got 2 million people out of work. Can you stop it at 2 million people? History suggests that the Fed has a terrible track record of containing modest increases in the unemployment rate. Once the economy starts shedding jobs, it's kind of like a runaway train. It is really hard to stop. In fact, in 11 out of the 12 times that the unemployment rate increased by a full percentage point within 1 year, unemployment went on to rise another full percentage point on top of that. If that's what happens this time, we'd be looking at least 3.5 million people who would lose their jobs. So, Chair Powell, if you reach your goal and 2 million people get laid off by the end of this year, and then, just like in 11 out of 12 times that unemployment has risen by a point in a single year, it keeps on rising. And then we've got 2.5 million people out of work. We've got 3 million people who get laid off. We've got 3.5 million people who get laid off. What's your plan?
Well, right now the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control.
I'm looking at your projections. Do you call laying off 2 million people this year not a sharp increase in unemployment?
I would say 4.5%.
Explain that to the 2 million families who are going to be out of work.
We're not targeting any of that, but I would say even 4.5% unemployment is well better than most of the time for the last 75 years.
In other words, you don't have a plan to stop a runaway train if it occurs. Chair Powell, you are gambling with people's lives, and there's a pile of data showing that price gouging and supply chain kinks and the war in Ukraine are driving up prices. You cling to the idea that there's only one solution: lay off millions of workers. We need a Fed that will fight for families, and if you're not going to lead that charge, we need someone at the Fed who will.
Vic slipped.
Senator Vance of Ohio.
Thank you, Mr. Chairman. Chairman Powell, thanks so much for being here. I have a question that's slightly far afield, but how often do you get to talk to the Federal Reserve Chairman, so I might as well ask it. So to give some context here, my family comes from Appalachia. Particularly, my grandparents grew up in southeast Kentucky, coal country, and then moved to southern Ohio, where I now have the honor of representing all of Ohio. And one of the things that you hear a lot when you study the regional history of Appalachia is it's often described as possessing a resource curse, right? So there's a lot of coal in central Appalachia that enables a certain amount of consumption. Obviously, consumption is good. People need food and medicine and other things. But there's also a pretty good argument that for a host of reasons, it causes malinvestment in the region, and consequently, you have lower productivity growth, lower innovation, and an economy that's much less diversified and much less dynamic.
Just say Rust Belt, you asshole.
I'm wondering when I hear about the history, when I think about and read about the history of Appalachia and the resource curse. I'm struck by some of by the idea that you could make a similar argument about the reserve currency status of the United States dollar. Americans have enjoyed one of the greatest privileges of the international economy for the last nearly 8 decades, a strong dollar that acts, of course, as the world's reserve currency. You know that better than I do. Now, this has obviously been great for American purchasing power. We enjoy cheaper imports. Americans, when they travel abroad, benefit from lower costs. But it does come at a cost to American producers. I think in some ways you can argue that the reserve currency status is a massive subsidy to American consumers, but a massive tax on American producers. Now, I know the strong dollar is sort of a sacred cow of the Washington consensus, but when I survey the American economy and I see our mass consumption of mostly useless imports on the one hand and our hollowed out industrial base on the other hand, I wonder if the reserve currency status also has some downsides and not just some upsides as well. And let me just put a final point on this, and I'd love to get your thoughts on that, Chairman Powell. We're, of course, now the main supporter of a massive land war in Europe between the Russians and the Ukrainians. I read recently, and I'm not going to comment on how perfect or precise these estimates are, but I read recently that the United States is trying to ramp up production from 14,000 artillery shells to 20,000 artillery shells. That's per month, while the Russians are firing 20,000 artillery shells in Ukraine per day. And when I look at the American economy, we have a lot of financial.
Is he saying that we're not making enough artillery shells?
Things, and I worry that the reserve currency status and the lack of control we have over our currency is perhaps driving that. I'd love to get your feedback on that. What are the upsides and downsides of the reserve currency?
That's a big question to try to answer.
You have 2 minutes, Chairman Powell, so plenty of time.
I can't even get started on that. So. We are the world's reserve currency, of course, and that's because of our democratic institutions. It's because of our control over inflation over many, many, many years.
God, what Lockheed Martin laborists
law in the United States, and those are the things. So once you're the world's reserve currency, it's used in all over the world in transactions, and it's the place where people want to be in times of stress, is in dollar-denominated assets. Now, so of course we benefit by being able to pay for our goods all over the world, pay for everything anywhere in the world mostly with dollars. That's an advantage.
If you're a congressperson, do you just get your dick sucked by lobbyists all day?
Burdens of various kind, but I can't call it all back to mind. But
are they handsome?
The other thing is, it's a very stable equilibrium, but it's not a perfect one. It's not a permanent one, rather. So there isn't any obvious
yes, you
candidate
do.
to replace the United States right now where you can have
dude's
free flow
got
of capital
trains
in and out of the
blowing up in
country
his
where you
state
can
full
really
of
trust the rule
fucking
of law and
toxic
democratic
chemicals, and he's going
institutions
on about not making enough
keeping
artillery
that, keeping
shells.
price
It's
stability.
like, we can't keep up with
Do you think
the
it gives us less control over our own
USSR's
currency,
stockpiles of
the fact
fucking
that it's
artillery
become
shells
the
that they've been
world's
building
reserve
for
currency?
50 years.
Control over our currency. I'm not sure. So essentially, what we try to control is price stability, and no, it doesn't make it harder for us to keep inflation under control. The United States.
How
has a
long till we're
smaller
back in a Cold
external
War?
sector
We're
than
getting
most
there.
Large economies. It's
I
only
can
about
tell.
15%. So mainly, what affects inflation in the United States is domestic supply and demand.
Do you think
mainly.
it makes it harder for us to affect and to fight back against currency manipulation, to control the export and import flows in a way that stabilizes our own manufacturing sector?
If I turn
what's
JPOW
important
up,
there is really the level of the dollar. And, when the dollar is
The
stronger,
Appalachia
obviously
guy is gonna be even
our
louder.
wares are more expensive abroad and that kind of thing. But we don't have an opinion on, matters of the level of the dollar really matters for the Treasury Department and the elected government, not for the Fed.
Thank you, Chairman Powell.
Thank you.
Thanks, Senator Vance. Senator Van Hollen of Maryland's recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here and for your service. I know the Fed is experiencing lots of challenges these days. I've got a couple questions that are just, I think, basic yes or no's, and then some longer questions. Would you agree that changes in the size of corporate profits can be one of the factors that affects the inflation rate?
Yes.
Right. Now, recently, we saw that the Employment Cost Index, which, as you know, measures the growth of wages and benefit costs, grew at roughly 4% on an annualized basis in the fourth quarter of 2022. Is that right?
That's my recollection, yes.
So if
They're not doing
corporate
a great job
profits
crushing the
were
VIX
to
right now.
decline from the extremely high levels that we saw recently, would it be possible to sustain the 4% growth rate in the Employment Cost Index for an extended period of time, even as we get inflation down to the target of 2%?
Depends on what you mean by extended period of time. So you would not, without a very, very large increase in productivity, which would be great, but that we don't expect, you wouldn't be able to sustain 4% wage inflation over the longer term. Over the shorter term, though, yes.
So over the shorter term, that would not be a justification in and of itself for raising rates. Is that right, in the short term?
Well, I think wages affect prices and prices affect wages. I think we do think that some softening in labor market conditions will happen as we try to get inflation under control, and will need to happen.
Right, but that's more a prediction about your efforts to fight inflation. Are you saying that simply looking at the current 4% growth rate in the short term is an excuse for jacking up interest rates?
I think what I would say is that the overall, all the data we look at in the labor market, including not just that measure of wages, but others, also unemployment, also participation, also job openings and quits and things like that. All of that, you put that into the picture, and I think you see a labor market that is extremely tight and is probably contributing to inflation. I've never said it was the main cause.
Right. I think the larger point here, based on your response to that first question about growth in profits, is corporations have a decision as to whether or not they're going to pocket more for profit, which they can, or provide higher wages to their employees. And if you actually lowered your profit margins, you could sustain a higher wage increase without violating the 2% inflation. Isn't that right?
Yes. I mean, when I hear profit margins, what we're seeing in the economy is pretty much about shortages and
Trying to crush the VIX.
supply chain blockages. And when there's not enough of a product, what happens, and there's a lot of demand, what you see is prices going up as the supply chains get fixed. And
Man, the fucking market
shortages are
maker is
alleviated.
not buying
You will
into-
see
buying
prices,
into these
inflation
pumps.
coming down. You'll see margins coming down, and that will certainly help with inflation.
Right, but
Oh, you're on
profits
the
are the
wrong
margin,
side of
right?
this.
They're going up beyond what they were before. That means that even with the increase of costs because of supply chains, they're making more profits. Which
Nice,
again,
Darb.
that they can do that. But my point is that as a contributor to inflation, as you indicated in response to the first question, let me ask you about the tight labor market because one of the issues in a tight labor market is parents with kids, including a lot of moms who would like to go back into the market, but are not able to do so because of lack of affordable childcare. The other issue is immigration, and I know that you've gotten some recent data on how some immigration figures actually have softened a little bit the tightness in the labor market. Can you just talk broadly about those two factors?
No, inflation's
Affordable
not a
childcare,
problem if wages go up.
and immigration,
Right?
more legal immigration, and how they could affect labor force participation and therefore also reduce inflation pressures.
So on the first,
just that nobody wants
we
to
don't-
slow
we don't
growth
make recommendations
at
or
the-
evaluate fiscal policy, but I will say there's
the cost
research
of
that
better
shows
wages.
that it helps keep women in the workforce when there's childcare available, which is, I think, kind of self-evident. Sorry, the second was
impact of immigration.
Immigration, yeah. So what I talked about with you is actually as part of the
Like if
January
wages were to, real wages
Bureau
were to go
of
up
Labor
10%,
Statistics
right?
report,
Who the
which
fuck would
comes-
give a shit about
the-
6%
sorry, the
inflation?
employment report for January.
But it slows
comes out
growth into the
in
future,
early
which is
February.
undesirable.
There is a section in there about more people. The Census Department has
How do you convince
increased
people
its
to increase the
estimate of
productivity without
workforce by
financial
something like
incentive?
870,000, and a
Ensure
significant
that
part of that
prices
has
are
been
too high for them to
immigration.
afford
So,
anything?
and that has moved up participation by a little bit, but it may be part of why we're hearing. It may be part of why we're hearing from in the labor market that the really intense labor shortage pressures that we were hearing about in 2021 and 22 may be alleviating. So that would contribute to that. Clearly, more people. Clearly, the economy is calling for more people with essentially two job openings for every unemployed person. And this can be a source of those people.
Right, and that would reduce the tightness of the labor market and reduce pressures on inflation, right?
May already be doing so.
Thank you.
Senator Kramer of North Dakota is recognized.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I can't resist responding to a few things that my friends on the left have said. For example, in his opening statement, Chairman Brown had a long list of things that raising interest rates won't do. Raising interest rates won't fill in the blank. I'm going to fill in the blank with a couple things. How about raising interest rates won't stop Senate Democrats and President Biden from overtaxing, overspending, overborrowing, overregulating? Chairman Brown said we should rebuild our supply chain by curbing offshoring, corporate offshoring. I agree. He talked a lot about corporate greed contributing to inflation. Okay. But how about regulatory greed contributing to corporate greed? How do you expect corporations to reinvest money if you overregulate their ability to invest that money right here in the United States of America? You want to onshore some things? How about energy policy? How about instead of looking to Venezuela or Iran for oil supply or Russia?
This guy seems
or
like
rather than looking to China for
he
electric
didn't
vehicles
find
and
a lobbyist
and
and he's
solar panels.
advertising
How
for
about we
one.
have a strategy
Like, hey, guys,
to
I'm
onshore
really
those things by
open
reducing regulation,
to these ideas,
reducing taxes, and letting those
and I need a
corporations
Ferrari.
reinvest their profits rather than
Like he's
than,
the Ohio
stock
guy. He
buybacks
was real specific, right?
or
he's like, we need some fucking
dividends.
artillery shells.
This idea that somehow the Federal Reserve
I would
is
like to make
supposed
more of them in
keep
my overly
inflation in
polluted
check
state.
while half
This
of
guy
the
doesn't.
government works
He doesn't
against
really
it
know.
is
You know, he's
mind-boggling.
just
Now,
like, I
know,
like
Mr. Chairman, you don't
corporations
like to
doing
comment
whatever the fuck they
on
want.
Policy. You and I have been around.
Why are you
and
trying
around
to stop
this.
them?
Anxious to advise us to spend lots of money during the pandemic. I don't think a lot of people blame you for that. You wouldn't respond to efforts by the Biden administration.
He needs
after
himself
we
a
were in
Dan.
robust recovery.
Everyone
from
needs a
not
Dan.
spending so much money. Okay, I can appreciate the change, but now we're in this debate between Republicans and Democrats, between particularly the House Speaker and the President, on how to raise the debt ceiling. And you've made some pretty strong comments about raising the debt ceiling, absent from structural reforms that would actually help us get back to a reasonable growth.
Can we just stop pretending like we care about our
warn you
debt?
again, if you're going to make political comments, if you're going to,
There's nothing more
policy,
American
be
than
consistent
not
with it.
paying off
Now,
your credit card.
I want to get back to the greening of the Federal Reserve and these, I call them stress tests. You can call them whatever we call them. But I'm concerned that now the Federal Reserve is starting down this path. Maybe it's slightly at first about climate stress testing. I just want to ask you this. If we're going to go down that path, if the Federal Reserve is now going to become part of the Federal Climate Police Force,
UN.
Are we going to consider the ramifications of having entire
Wait, I hope I'm
communities
right.
and economies, factories and manufacturers, whatever, energy entities, large server farms, leaving them susceptible to a very unreliable,
I'm
very
wrong.
expensive energy
Shame.
source?
No,
Is that part of the
I
stress
didn't.
test?
I'm wrong.
No, those are considerations for
That's
elected people,
embarrassing.
not for us. We have a narrow role to play here, but it's a real role, and I can talk about that if you'd like.
Well, yeah, I would like you to, because again, if we're gonna start doing stress tests for the 6 largest financial institutions related to climate, which really is more weather than climate, then are we going to consider the effects of an unreliable energy source at several locations throughout our country?
Do you just call the same
only
thing
focus
two
is
different
on the
things?
safety and soundness of these institutions, and do they understand and can they manage all of the risks that they run in their business model? That's our only goal. We're not looking to be climate policymakers. Climate policy is clearly going to have effects on regions, on companies, on individuals, on countries, disparate effects, and that is not for unelected people like us who have a narrow mandate. But I think it does touch climate, and you're right to be concerned that we find ourselves on a slippery slope. But honestly, I think the climate scenarios are something that the banks are already doing and themselves, and
It's like, that's
climate
not rain,
guidance
it's
is something
water.
that they're looking for. They want to know how we're thinking about this, but we will try really hard not to get on a slippery slope and find ourselves becoming climate policymakers. It's just not appropriate for an independent agency.
Okay, and I completely agree, and I hope you stick to that. And I think you ought to, ask the banks to consider what the overreaction might, what kind of vulnerabilities that might expose. With that, with regard to what Senator Warren was saying on her monologue, one thing about ideologues, they have the luxury of binary choices. You have a really big job, and you have a single, in my mind, one
Big
and a half,
job.
maybe
You should
two,
work for NVIDIA.
two missions. I think the first one handles the second
That's
one
the
okay.
lobbyist you
But
need.
it's got to be tough when the White House
Talking
is
about
working
big
against you and you
things.
don't have to comment. Thank
Big
you.
language
Thank you, Mr.
models,
Chairman.
big jobs. Mega large
Astro
jobs.
Montana's recognized.
Sometimes you just
Chair
gotta
Powell,
crank
thank
it,
you,
know?
Thank you for being here today, and thank you for serving in this critical role at this critical time.
Excuse
I
me,
have
Senator.
talked many
It's a
times
mega
with you,
large job.
and I, especially right now,
I love this shit.
cannot
It's so
overstate
funny.
the importance of the Fed's independence. I said it in the previous administration. I say it now. We cannot be playing politics with our economy.
Yes, we
and
can.
That is a fact. From a climate standpoint, I
Wrong.
would just tell you it's entirely artificial right now anyway, because if you look at the hundreds of billions of dollars this country puts out every year in disasters due to climate instability, we ought to be asking our question, is that sustainable? Because quite frankly, it has to be done, and I don't think it's sustainable. So we've got to start looking for some solutions on the climate side sooner rather than later. The Reserve has a tough job.
I mean, they're
I
kind of
really
holding the
appreciate
line on VIX at
how
19,
you've
but
done
they
it.
keep trying to, they keep coming in with
Reasonable,
futures buys
working together,
to try to
making
pump
hard
it back
decisions,
like they were doing,
for
but
the
they're not
good
meeting any
economy.
market maker support.
We have
So
to
it's
get
just
this right.
falling right back
So the
down to
question is,
19.
how much
I
has
think they'll try to
inflation
push hard
decreased since
and
its
crush it back to
peak?
that like 1870 level.
It depends on the measure,
But we'll see
it's
what happens.
Meaningfully, at least a couple percentage points.
Okay, and has unemployment gone down as inflation has gone down?
Unemployment has gone down.
Drew Carey has done
Now
well
a
for
54-year low.
himself.
Yes. So the question becomes, and I always think back to in 1998, I bought some property, and the interest on that property was 10% in 1998, and I thought I got a hell of a deal, by the way. I thought it was just great. But the truth is interest rates have been artificially low for the last, 20 years, probably? And the question becomes, as you look at the economy and as you try to make the determination whether
How's a
the
pump
inflation is
even
caused
realistic
by
after
demand
this?
or
Oh,
supply,
because people have calls and
where
people
does all
take
that fall
profits from
in
puts.
to your decision-making moving forward?
Well, you mean the level of interest rates. So in theory, there's this thing called the neutral level of interest, and we know it only
People
by
are like,
forks.
that's
And
enough
neutral
money,
is
and
the
they
level
close their
that
puts,
neither
and then other
pushes
people
the
are like,
economy
oh
up
shit,
nor
they're
pulls it
closing their
down.
puts.
And it changes
They
over
buy
time.
calls.
This is the thing about
and
these
then
important
someone
variables in
hedges the
economics.
futures.
So what's
then
happened
pump.
until now was that the neutral level of interest went down and down and down to the point where, many countries had zero interest rates and very low inflation. Now we have this a series of shocks associated with the pandemic, and we have rates at 4.5%.
I don't know, what's NVIDIA doing?
And we have the labor market very strong and inflation reacting somewhat.
It's just
but
doing its
it does
thing.
raise the
NASDAQ's
question of
pretty
where's the
volatile
neutral rate.
today.
Honestly, we don't know. I think we look at the current situation and we see that there's not a lot of evidence hard to make a case that we've over tightened it. It means we need to continue to tighten. I think we're very
big
mindful
sell-off.
of the lags with which our policy works. We don't think we need a significant increase in unemployment, and we're certainly not aiming for one. But we do think there'll be some softening in labor market conditions to get to 2% inflation.
When you're looking at interest rates, I know we talk about energy prices here and the price of gasoline, and then if you go over and Europe is much, much higher. Are we comparable? I'm just curious. Are we comparable with our interest
I mean, this
rates here
hearing's not
as-
making me
as-
more
as with,
bullish or
say,
bearish.
Europe?
We're very close to where Canada is. We're a little bit higher than where Europe is. Europe's traditionally had much lower inflation. They now have very high inflation, and they're still increasing rates, but they're a bit lower in terms of rates.
So if we do not get the inflation under control, and like I said, I think the steps you've taken have
Stop
been
writing in all
reasonable and
caps.
measured. If
I'm
we
not
don't
gonna
get it under
answer you.
control, what is that really? What are the impacts?
More
of that?
downs?
Well,
Could.
the social costs of
We'll see.
failure.
I mean, there's
is
a
one
good
way to
chance
think
we
about
see
it,
some
are very,
profit
very
taking
high.
soon.
So if
and a little
inflation were to
dip in
continue,
VIX. I
at
think
some point it will become
right now futures
that will become the
probably
psychology.
retest
People will come and businesses
40,
will come to
17.
expect high inflation, and that will make it more
I just sold
self-perpetuating.
an Upstart
That will mean
$17
an up and
CSP.
down
Thoughts?
economy. It'll mean
It's okay.
you
It's
know,
not
it'll
my
mean something that looks
favorite
more
price,
like what we've
but
seen
it's
in
all
periods
right.
of high inflation. Capital allocation is difficult in a world like that. It's not a good time for the economy. What we want to do is restore price stability firmly back at 2%, so
Just
that we
cap
can have the
corporate
kind
profits,
of
man.
strong labor market for a
It's easy.
sustained period that we had before.
Once again,
You can
thank
have
you for your work.
capitalism
Thank
with
you for
capped
your
profits.
independence, Senator Daines.
Thank you.
Thank you, Senator Tester. I'll be handing off to Senator Cortez Masto when I'm finished.
All the
up as well.
problems solved. Simple.
Mr. Chairman, good to have you here today. When I am back in Montana, the number one issue I hear, certainly
No,
across
that's
the state, is the
un-American.
high cost of
It's
gas,
nothing
the
more
high cost of
American than
groceries, and overall how
overcharging for taxes.
Paychecks are shrinking because of inflation. It's a crushing blow.
Yeah, it's
It
in the
has real
name,
life
capitalism.
impacts. It's top of mind issue for Montanans. It's also important to note the devastating impact it's going to
Who
have.
the fuck cares
on our
about this
nation's
guy?
economic
Nobody lives
future.
in Montana. Shut the fuck
In
up.
fact, in October of last year, I sent a letter to Congressional Budget
You
Office
represent like
Director
9 people
Swayze
and 4 cows.
regarding the impact that high inflation and the elevated interest rates would have on the cost of servicing the federal debt. His response painted a less than rosy picture, but then we got the
4 million
CBO's
cows? Whatever.
updated 10-year baseline forecast.
Hundreds of
in
horses.
February, and it confirmed the truly dire situation that we find ourselves in. Driven by interest payments on the debt, the CBO now projects that cumulative deficits during the 10-year window, and I recognize where deficits come from. It's irresponsible
Are you sure?
spending here in Washington.
Oh.
But the cumulative deficits during the 10-year window will exceed $20 trillion. The cumulative deficits, not talking the debt, because it's going to grow the total federal debt to more than $51 trillion by 2033. Now, 2033 used to sound like a long ways away. We're 10 years away. 10 years goes by very, very quickly. Within 5 years, we're going to spend more on annual interest on the national debt than we spend on national defense. You think about that for a moment. And these are coming out of the CBO. These absolutely shocking, but quite frankly, predictable projections go back to a debate we vigorously had here in the banking community. I remember when Lawrence Summers, of course, former Secretary of Treasury under President
I propose that we raise taxes
economic advisor to President Obama. He
on American
warned us.
ranchers.
He said,
hardworking
he was practically
American
warning
ranchers.
my colleagues across the aisle. Says you can't move forward.
How do you
with
feel
these
about
purely
that,
partisan,
Senator from
that type
Montana?
of $1.9 trillion spending extravaganza? We had $1 trillion of unspent COVID money in December of 2020.
Cow tax.
And that passed on a purely partisan vote. We said it's going to start to ignite the inflation fires. So I certainly hope
I'm
the
gonna get shot
president's
by somebody
budget,
from
which we
Montana
expect to see
now.
later this week, will propose pro-growth policies that can get us out of this.
Won't somebody
mess,
think of
and
the
I would argue,
ranchers?
almost an existential crisis as we look at what's going to come at us here, of course, the next 10 years with debt and service on that debt. Unfortunately, as the president said in the State of the Union address, the president says he's going to raise taxes. That's a recipe for disaster. It's going to crush productivity, discourage investment, stifle economic growth even further. I want to turn to my questions now.
Did he
Chairman
just
Powell.
wait? He just got done.
You're raising interest rates to combat the inflation we've seen in the economy over the past few years. Is that correct?
Yes.
And although this is the domain of Treasury, a higher Fed's fund rate will mean higher borrowing costs. Is that correct?
Yes, all else equal.
Good.
So I just want to just connect the dots here around inflation.
need to?
Was sparked.
I thought you understood
One
deficits.
of the big reasons was massive spending here in Washington. And now we're going to be bearing the challenges with higher debt service over the course of the next several years, where we're going to see debt service exceeding defense spending, which is we see the threats of China, threats around
Hold
the
on,
world.
he's
I think
connecting
very, very
dots.
Concerning. Now, as a grandfather of
there
four,
it
soon
is,
to
the
be
VIX
5
crash.
grandchildren, this is things you think about more and more as you look forward.
Pamp it.
I want to change here and talk about American energy. When the war in Ukraine broke out, many feared that Russia would cut off natural gas exports and cause energy inflation to spike. Prices didn't spike as much as anticipated, due in large part to the fact that American companies stepped up to the plate. As of late last year, the European Union now receives more liquefied natural gas from the United States producers than it does from Russian producers. And that's a good thing for the world to see more U.S.-produced energy. Chairman Powell, do you believe that European and American inflation would have been manageable if not for American energy producers?
I certainly think that particularly our natural gas assets have helped Europe make the transition.
Any sense of how much worse the global energy picture would be if you would imagine a world where we're not producing and shipping energy to other countries?
It'd be hard to estimate.
Probably worse.
Yeah, I mean, I think it's been clearly Europe has managed better than expected, and a part of that story is just U.S. energy exports. Also, the winter wasn't as bad, and the Germans made some good decisions.
Yeah, we made some prayers that says we need to pray for a warm winter for Europe, and I think they got one, which was something that's been helpful. I'm out of time here. I'm going to send this back over to Senator Cortez Masto.
Thank you. Chairman Powell, it's great to see you. Thank you so much. I know it's been a long morning. Always appreciate you coming to talk with us here on the committee. I want to first align myself with the remarks from Chairman Menendez supporting a Latino nominee to the open seat on the Federal Reserve. It's been more than 100 years, and a Latino has never served on the Federal Reserve Board. And I know there are many strong Latino economists and economic experts who would capably serve. So I want to put that out there. Chairman Powell, I also sit on Senate Finance. Right across the way, we are talking about affordable housing. I think for purposes of so many of us across the country, including in Nevada, when we talk about affordable housing, it's also about workforce housing. It's about making sure families that are working so hard have an opportunity to keep a roof over their head. Right now in Nevada, if you're making minimum wage, you have to work 75 hours a week just to be able to afford housing. And so I want to talk to you about this. I was distressed to see in the report that that activity in the housing sector has contracted as a result of the elevated mortgage rates, and you've been talking about that. I often hear from Nevadans who say, I don't know if I'm ever going to own a home, and many feel resigned being stuck in a cycle of renting. So, Chairman, how do the Federal Reserve economists and leaders think about the balance between keeping interest rates low to spur that affordable home building and home buying while addressing inflation?
We have a dual mandate from Congress, as you well know, which is maximum employment and price stability, and that's really what we take into account. We don't, and of course, interest-sensitive spending is the thing that gets the most support when we cut rates, and the thing that is most affected when we raise rates, and that means housing to a significant extent. That's not a choice that we make. That's just the way it works, and we only have really one tool, which is monetary policy. So, you know, we don't really try to use our tools to affect broader housing policy, but really just to achieve our statutory goals.
It happens to just unfortunately be in effect as you try to achieve your statutory goal. Is that?
Yes.
Yeah.
Yes.
And so I want to have you have the opportunity to address Senator Warren's conversation with you earlier about the tools that you have and the impact that it has on causing potentially more people to be unemployed, and this obviously has an impact on their ability to afford homes as well. Can you address that?
I'd be glad to. I want to be clear that we do not seek, and we don't believe we need to have a very significant downturn in the labor market. And it's not just hope. I think if you look at the situation in the labor market, you've got all these job openings, and in principle, you could reduce the job openings without seeing a really significant increase in unemployment. Also, you're starting from such a strong labor market. It seems as though you're a long way away from anything that looks like a recession. Just looking at the labor market by itself. So,
triangle.
honestly, we don't know that we need that there will need to be a really significant downturn. Other business cycles had quite different backstories than this one, and we're going to have to find out whether that matters or not. But I do think that I've said all along, and my colleagues and I have too, that we believe that we can. There's a path to restoring 2% inflation with less significant effects on the labor market than have typically been seen in downturns.
And for purposes of the general public, the people, Nevadans that I know that are struggling, we have one of the highest, we've talked about this, and thank you for always being willing to talk with me. We have one of the highest unemployment rates in the country. Our service sector was hit so hard. We're still at over 5% just in southern Nevada. We have high gas prices. We have grocery prices. We have housing prices that are high. So one of the things that you commented on, and you just did again, but I know it was in your opening remarks, that, and it's quoted right here, and let me just say, our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. For the general public, for those working families,
they can push out the 40-20
why is getting it to 2% so important?
We can get so that has become the globally agreed. Essentially, all major central banks target 2% inflation in one form or another.
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does, and it's I guess it's obviously not it's not obvious how that is, but. 2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%, then it will. If everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it. So having a 2% inflation goal, which we had for many years, de facto we had it, then we formally adopted it in 2012. But for years before that, we were effectively targeting 2% inflation. And what that meant was that inflation, one of the reasons why inflation was low and predictable is having a real target and sticking to it, not changing it, at convenient moments. So we think it's really important that we do stick to a 2% inflation target and not consider changing it. We're not going to do that. It just is, people will be better off if the whole question of high inflation is just not part of their lives. That's kind of the definition of price stability. It's if people live their lives without having to think about inflation all the time.
Thank you. I notice my time is up. Thank you so much, Senator. Senator Lummis.
Thank you very much.
Vision
Madam
Board
Chairman, and
Economics. What's up,
welcome, Chairman
Fluffy?
Powell. When you're setting these rates and making these decisions and seeking that 2% magic number, are you considering the cost of borrowing for the United States, knowing that Congress has over borrowed and that we have overspent and that the national debt is at now at least 97% of GDP, and that we're going to face challenges of our own making. This is not about what the Fed has done. This is what about the Congress has done that you have to factor in to your decisions. Do you think about the costs of borrowing for the United States itself?
No, we do not, and we're not going to. In other words, that would be fiscal dominance. If we were, constrained in our monetary policy by the budgetary situation of the United States, and we're not. We're clearly not. The path we're on is not sustainable, but the level of debt that we have is not unsustainable. Is sustainable. Put it that way. So we don't think about interest costs when we make monetary policy. We think about maximum employment and price stability.
It's your opinion that the level of debt we have is sustainable?
Yes, I mean we could clearly we have the largest economy in the world. We can service this debt. That's not the problem. The problem is that we're on a path where the debt is growing substantially faster than the economy, and that's kind of by definition in the long run unsustainable. And the way countries have gotten or fixed that is with longer term programs that have bipartisan support and that address the actual problem in the budget. That's really the
not really
the
pricing
formula.
down puts very
Thank
much.
you. I'm going to switch to stable coins. You're a member of the President's Working Group on Financial Markets. The working group called for bank-like regulation of stable coins in late 2021. Then on January 3rd of this year, in a joint staff statement, the federal banking agency stated that even after the bank's capital, BSA, AML, and risk management, a bank issuing a stable coin on a, quote, open, public, or decentralized network is highly likely to be inconsistent with safe and sound banking practices. I'm going to say that again. Even after a bank's capital, BSA, AML, and risk management, a bank issuing a stablecoin on an open, public, or decentralized network is highly likely to be inconsistent with safe and sound banking practices. So I'm a little confused about where we're heading on stablecoins. Does the January 3rd statement mean that the Fed has decided that stablecoins on a permissionless distributed ledger have no place in banks?
So I think that there are real concerns about permissionless public blockchains, and the reason is that they've been so susceptible to fraud, to money laundering, and all of those things. So I think what you heard from the federal banking agencies in one of their reports was that they would tend to look at those as not consistent with safety and soundness.
And what about properly regulated stablecoins? Do you think they could have a place in our banking system?
I certainly think that in a world of appropriate regulation, where the same activity, where stablecoin activity gets the same regulation as comparable products in different places, then there certainly could be a place for stablecoins in our financial services sector.
Thank you. The European Union, UK, Australia, Switzerland, Singapore, and others have all moved over the last few years to create a legislative framework for digital assets. The European Union in particular is attempting to be a standard setter again, like it was with its data protection rule. Is the United States in danger of being a rule taker, not a rule maker when it comes to digital assets?
I do think it would be important for us to have a workable legal framework around digital activities. I think that is important and something Congress, in principle, needs to do, because we can't really do that.
Yeah, thank you. Senator Gillibrand and I agree with you. One area we've already seen is in the Basel Committee on Bank Supervision. They propose prudential treatment for crypto assets framework, setting forth banks' capital standards for digital assets. The Basel Committee's framework does not impose a capital charge for digital asset custody, whereas the SEC's Staff Accounting Bulletin 121 imposes a prohibitive capital charge through the back door and places consumers at risk in bankruptcy. Similarly, the Basel Committee framework allows banks to issue or hold digital assets on their balance sheet if the requisite capital is set aside. So back to January 3rd, 23, the Fed and other bank regulators have said that it is forbidden for a U.S. bank to conduct these activities no matter the capital. So my question is, what does the rest of the world know about digital asset regulation that we do not, that the Fed does not?
So as we discussed, this is an SEC staff accounting bulletin, and it's not something that the Fed issued, and I'd be loath to comment directly on it.
The issue is, and what concerns me, is that the Fed and other federal banking agencies are not following international norms on digital asset regulation. That's just my comment. Thank you, Chairman Powell, for being here. I now recognize Senator Smith.
Well, thank you. And Chair Powell, it looks as if Senator Britt and I are the last people standing at this committee hearing. Thank you for passing on the gavel to Senator Lummis. And I want to thank you for your service and for our recent conversation. And before I get into my questions, I would just like to note there's been a good back and forth amongst our committee around some of the big economic challenges and opportunities that we face in this country. And I would just like to note that the programs and the spending that the ranking member and some of our colleagues have blamed for inflation provided critical relief that kept working families and small businesses afloat during a global pandemic. And in fact, many of these policies were passed on a bipartisan basis and signed into law by both Republican and Democratic presidents. And I also just want to add that the laws that the Democrats passed to lower prescription drug costs and healthcare costs and to lower energy costs for Americans are helping to lower basic costs for families, all of which, by the way, was fully paid for. So I return, Mr. Chair, to what you have said to me privately and to all of us publicly, which is what we ought to be looking for is striving for bipartisan solutions to find a path forward. And in fact, Senator Lummis and I were just talking about this yesterday when it came to housing policy. So just want to put that out there. When you and I spoke yesterday briefly, we talked about the Community Reinvestment Act, and I know that I appreciated the chair raising this point earlier in the hearing. But I want to just return to that briefly. I am very glad to see, it's been about a year since the Fed and the OCC and the FDIC issued the proposed rule to modernize implementation of the Community Reinvestment Act. I don't think that the proposal was perfect by any means, but it does make really important improvements to how, through the CRA, financial services organizations can serve and meet the needs of communities that are full of assets but lack the resources to make it happen like wealthy communities can. So I think, Chair Powell, you indicated that you expect this new CRA rule to be finalized in the coming months. Is that what you indicated?
Yes, that's right.
And can you just tell us, with the departure of Dr. Brainerd, who will be spearheading the CRA efforts?
So I've asked Vice Chair Barr to be responsible for moving the project forward. Of course, it has to go to the whole board.
Right.
And everyone gets a vote on that, but he'll be pushing it forward.
That's great. Thank you. I was glad to see that disaster preparedness and climate resiliency were added to the definition of community development activities that would be eligible for the CRA credit. And this is important, of course, because low and moderate income folks and the communities that they live in often face some of the worst impacts of climate change and extreme weather events. This isn't social engineering. This is dealing with the actual costs and challenges that people experience because of climate change. So, Chair Powell, can you talk to us a little bit about how you see that change and how it fits with the CRA's overarching objectives?
So I think it fits for the reasons that you said. Honestly, I'm a week or so away from getting a briefing on where the proposal lies, so I'm reluctant to touch on. I mean, I'd rather wait till after I'm fully briefed on where that agreement came out after the FOMC meeting. So.
Thank you. That's fine. I'll look forward to continuing this conversation with you and with Mr. Barr. And
I tried to steal my calls.
This. I think my view of this is that climate change and the economy are inextricably linked, and the reality is that climate-related action or inaction has a direct financial impact.
What are the chances J-PAL has an unholy rosary in his hand that's helping him come up with responses?
I was wondering
by vibrating
if you would just
at the
be
end,
willing
he
to
pulls
update
them
us
out
briefly
and starts
on
that Mexican
some of the
lawnmower
next steps that
scream.
the Fed is
Fuck
going to be
your
looking
pets.
at as you evaluate the resilience of financial institutions to with respect to climate risk. There's this pilot project that just was started in January, I think it was, of this year, and I'm curious to know how you see next steps there.
So we're doing really two things. One is we are doing a climate stress scenario, which the banks are already doing, the large banks, the 6 that we're working with, and that's really just to understand
the market is far from
of
priced in
understanding the
a
risks
0.5 rate
that are associated
increase.
with this over the longer term. They're already doing it, and it's something that there's a lot of learning going on around the world, actually. The other thing we're doing is providing guidance. The banks want clear guidance. They actually want one set of rules globally. The big banks that do business around the world, they're hoping that they aren't in a world where there's just different regulatory regimes everywhere they go. So we're kind of working on that as well.
Great. Thank you very much, Mr. Chair.
Thank you.
Thank you, Senator Smith. Senator Tillis of North Carolina is recognized.
Thank you, Mr. Chairman. Chair Powell, thank you for being here. In your opening statement, I was here for that. I think you touched on some of the interest rate sensitive components of GDP and non-interest rate sensitive components of GDP. I think you said that we do have a concern in the latter group, inflation expectations, labor market tightening, et cetera. Can you tell me a little bit about how you're looking at the interest rate sensitive and non-interest rate sensitive readings, and whether the Fed, what sort of Fed actions can take place to avoid a zero landing?
Spybridge 400.
Sure. So on the housing sector, of course, is interest-sensitive spending is the thing that they're very directly affected by our policies almost right away. And the poster child for that is housing. And so you've seen mortgage rates now go back up over 6%. You've seen housing starts come down. Activity in housing has declined as people are reluctant to get out of their the low rate mortgages they had before. So housing activity is slowing down. On the other hand, housing prices went up in the aggregate more than 40% since the beginning of the pandemic. So we may be seeing some price correction on that too. So that's coming along. And housing inflation, which is a big part of the CPI, a little bit smaller part of the PCE, the inflation measures we follow, or we rely on, that will be coming down because of the slowdown in the housing market. I guess I would say the service sector is probably less interest sensitive than that, and that's restaurants, it's travel services, travel and leisure, it's healthcare, it's financial services, healthcare services, all those services, and that's a big part of our economy. This sector is 54%, I guess, 56% of consumer spending on non-energy and food. So it's very important, and it's it's about having a little bit softer demand and about having some softening in labor market conditions. We think our tools will work on that, but we do expect that will take time.
Thank you. I know the chairman in his opening comments mentioned a belief, I don't want to misquote him, but a belief that we have too little capital in the banking sector. May be true of a couple of banking institutions, but how do you feel about the current capital that our broader banking sector, irrespective of where they are in size? What concerns, if any, do you have about the capital that we see out there already?
So I supported all of the capital raising that we did. I joined the Fed in 2012, and we were in the middle of implementing all those Dodd-Frank increases, and I supported all of them. After careful thought and discussion with my colleagues, I think the new vice chair is doing what new vice chairs do, which is to take a fresh look and ask the question.
AMD has to hit 75 by next Friday for me to break even.
Certainly, the vice chair does. The question is it at the right level? And I think that's what happens with a new vice chair for supervision. We don't have any proposals yet, but at some point we will.
Yeah, I'm going to be meeting with the vice chair, and we'll drill down on that topic. But I do know, I was over in Finance Committee, so I wasn't here, but I do know that several members, well, first off, we know that Vice Chair Barr is looking at a holistic review of capital requirements. I think that that's a good idea. But I have to ask a question.
It's okay.
Do you think,
it's not leading,
does the Fed consider the bipartisan passed Senate Bill 2155, which is currently the law of the land,
maybe once it's already running,
the superior to any of the Basel requirements?
It can be used to confirm it.
Any holistic review process? In other words, it is the law of the land. How does that weigh into how these reviews go?
So 2155 was, I think you're talking about.
It could be okay for
tailoring. So Dodd-Frank actually called for tailoring, and what 2155 did is it said change may tailor to shall tailor, and it also changed the thresholds.
I don't think it's anything you can't just use price
absolutely
for,
bedrock
especially on
aspect of our bank regulatory system, and anything that we do is going to reflect what we think is appropriate tailoring between, the different sizes and risks and of the financial
obviously,
institutions.
I think it's going to pause. I have a bunch of calls.
What we were trying to accomplish as a part of that, I don't expect you to respond, I know that we're coming to the end of the hearing, is that a holistic review of a financial services institution is going to reveal the fact that
still very heavily weighted to
many
the
of these financial
4,000s.
institutions are very different based on the activities that they're most
fairly strong ceiling
most
price
involved
action.
in. And those sort of holistic reviews may actually result in increasing capital requirements for two
There's
banks
some
that look like
call-side
peers,
interest to the
but not
upside,
for
but it's
another
minimal.
because of the inherent risk
probably only be
associated with
realized
their
on the capitulation
business
of
focus.
puts.
Does that make sense?
To your earlier point, though, the law, the Dodd-Frank language, and as amended, actually requires that we take those things into consideration. So
And I hope
we
that
certainly
we will.
We will.
Thank you.
Thanks, until Senator Warnock is recognized.
And for
from
VIX to move up.
Thank you so
someone's
very
gotta
much,
sell
Mr. Chairman.
big, right?
Before I begin my questions, I know that this committee will soon consider a
ROC
new
same like
nominee to
MACD
serve on the Federal
line.
Reserve
Most
Board of
oscillators do the
Governors.
same shit.
And while it has not historically been the case, it seems to me that the board should reflect the diversity of our nation. That those things
I'm
are
expecting a
connected
big
policy
bull run in the coming weeks as big participants
representation
pump and sell their
are
equities.
connected.
They've
And
been
I
doing
hope,
that already.
That we will see
for,
sitting before
like,
this
2 months.
committee a nominee that pushes us closer towards our ideals
42,
of the pluribus unum auto
422, 425 on SPY.
One, and I support Senator
I don't see
Menendez and
it.
others who have called for a diverse nominee, specifically the fact that we've never had a Latino person serve on the Federal Reserve Board. I think it's a huge oversight, and I hope we can move quickly in that direction. That said, my state of Georgia is in a housing crisis. Like much of the country, the Federal Reserve Bank of Atlanta has designated owning a home in Atlanta as unaffordable.
I mean,
to
they
the
keep trying to
average home
crush
buyer.
the VIX back down.
But this is not just a city problem.
With like
Harris
futures
County,
buys,
Georgia,
but it's really
with a
not.
population of less than
It's really not very
35,000
effective.
sitting on
The market
border of
maker hedge
Alabama
is not in their
also
favor.
rated as unaffordable. In the midst of this housing crisis, the Federal Reserve continues
Especially with the number of
continues to
zero
raise interest
DTs at
rates.
4,000.
This makes mortgages a lot
Hopefully
more
they try a
expensive
little
for
harder.
families, especially young families looking to buy a house.
Because they don't want to lose
According to the
control
National
of the
Association
VIX.
of Realtors, the share of first-time home buyers is at an all-time low, while the average age of a purchaser is at an all-time high. Chair Powell, you have said that there has been, quote, an imbalance in the housing market. But if you're a
Miss
Georgia
Bank puts
family,
you to scared of the
parents in
continuing
the
pumping yesterday.
mid-30s,
Do you
young
think we'll have
children,
one more
and all you
chance to
want
see
is to
some
be able to
pumping
afford your first home,
close to 4,100 in
in
the
place
coming
and build
days?
equity to one
Or will
day
you just
pass
keep
that
going
equity
down
on
from
to your
now
kids.
on?
How are the
Did you buy
Fed's
some puts
actions,
just today?
helping
I did
that
buy some
family
puts
afford a
today. A lot of
Our
them.
mandate is
mostly
to
zero DT,
provide
but
maximum employment. Use all
yeah,
our
I
tools
think
to
we'll
foster
probably
maximum
have an
employment and price
opportunity to see
stability.
some
And we're using
movement
those
to the
tools
upside.
really now to
Provided
restore
there's more
price stability
volatility
at a time
tomorrow.
of the highest inflation in 40 years. I think that
Also,
the same
don't forget
people who are having high
oversold
mortgage
capitulation, which can
costs,
drive up
if they have a
prices
floating rate
back
mortgage,
to that 40, 50
are also
level.
experiencing
Greg, I
high
had a dream
costs for
last
all
night
the-
that
all
I
the
was
basic
lost in the
necessities of
woods
life.
until you
And-
found
and
me
one
and
of our
brought me
most
to
fundamental
your home
roles
and
at
took
the
my clothes
central
off so you
bank
could
is to-
dry
is
them,
to
then
keep
made me
price
chicken
stability.
noodle
So
soup as I lay
we have
naked
to
by the
prioritize
fireplace.
that in
You're my
order.
guardian
I
angel.
understand
FYI,
the
your sheets are
tools and
soft.
the
Yeah,
mandate, but
3,000
my concern
thread
is
count.
that we could have a cure that's worse than the disease. It doesn't do families any good if we stabilize housing prices while mortgage rates continue to skyrocket. It doesn't matter to me why a house is unaffordable. Maybe the house is unaffordable.
Are
Maybe
you
the
bullish
mortgage
on
is
SPY?
unaffordable is
No.
unaffordable.
Not-
How does the
not
Federal
bullish.
Reserve
I
continue
have some
to
calls.
consider the total price of home ownership, including costs of mortgages,
take a gander
and
at
executing that
DKS?
mandate to keep prices stable?
We'll buy it right now, just so we're clear.
Housing inflation is a very important
let me take a look.
component of various inflation indexes, and and the way that's calculated is
Looking
the
good,
economists
actually.
look at rents, and then for people who own a home, they impute a rent depending on the value of the home. So it actually
Rejection
does
here, maybe
factor
look
in,
into
and I would
the-
say the measures of
like 116,
new leases that are being
125 to
signed
116
and new
range
housing
for an
prices
entry.
show significant declines in inflation, not in price, but in inflation.
Good earnings.
And that will play through so that overall inflation over the course of the next 6 months or a year will decline.
If we're seeing mortgage rates go up, yes or no, does this discourage folks who may have a low interest mortgage rate from putting their home on the market and then possibly paying double the cost on a mortgage for their new house?
It certainly could. People who are in a low mortgage, a fixed rate, low rate mortgage, I would assume many of them are not moving.
Yeah, does raising the federal interest rate change the cost of borrowing for a company hoping to develop new housing?
Yes.
Does it make it more expensive for suppliers to finance expanding production to meet supply needs?
It does.
Does it give businesses less wiggle room to offer higher wages and attract qualified workers?
Indeed.
Yeah. So all of these actions have to be taken into account. Federal Reserve does not control housing supply, but its actions do have a massive effect on housing supply. And some of these supply effects, it seems to me, will be felt for many years, well beyond when interest rate hikes have slowed or rates have even gone down. And I know you've got a difficult job and a tough situation, but I just hope that the Fed will think more about its actions and how they affect housing supply, even as it attempts to control housing demand. Thank you.
Thanks, Senator Warnock. The last question, I believe, questioner is Senator Sinema is remote from Arizona.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today. In raising interest rates last month by 25 basis points, the FOMC cited Russia's war against Ukraine as a key contributor to elevated global uncertainty. The war has serious implications for global energy and agricultural markets. And as you know, energy inflation in particular can appear in the form of higher prices of other goods and services. This feels like a substantial driver of inflation overall. And
It's
in my
the
mind,
AI
we can't
mother.
understand the global economy fully without assessing the range of possible outcomes in Ukraine. As we've also seen, the war created new supply chain problems overnight and has caused abrupt price swings in select committees. How is the FOMC assessing the economic impact of the war and the range of potential outcomes in order to inform how it sets monetary policy?
So the principal, I guess there are two things to say. One is that the principal way that the war has affected our economy is really through commodity prices, grain and particularly energy prices. That's the main thing. I think really, and those have both flattened out. Energy prices globally have settled down and they're at a higher level, and and food prices as well to some extent. So the second thing I would say is that it represents a significant risk. So the war in Ukraine, the outcome is uncertain, developments there are uncertain, and you have to think of it as a source of potential risk to the global economy and to our economy. We don't, and we look at alternative scenarios and things like that. We don't really do it from a geopolitical standpoint, but we do, of course, model scenarios where commodity prices are higher and things that would look like what could happen from Ukraine.
Thank you. At home, Arizona families are struggling to navigate this economy. Higher prices are making it more difficult to afford groceries, gas, rent, and airfare. But on the other hand, rising interest rates are crowding out investment and making it more difficult for first-time homebuyers to buy a home. Inflation has also slowed housing development to a halt in Arizona. And as you know, Chairman, housing is a major economic contributor in my state. It's also clear that more spending comes with trade-offs. And it's why tackling inflation has historically been so difficult. And yet it's more important than ever that we get it under control. There's been much debate about a
Isn't it
soft
far more
landing,
likely
where we
that
get
out of the money
inflation under
zero
control
DT
without
calls
triggering a
capitulate
recession,
rather
versus
than
a hard
puts?
landing,
Well, we
where
hover
inflation
around
comes down but triggers
4,000.
a painful
And
recession.
Theta's eating the out of the
Some
money calls
economists are
alive
currently
much
saying
more
we're
than
seeing
the
no landing
puts.
right now, that growth is
I
actually
mean,
accelerating, and that more
yes.
aggressive actions will be needed to get
However,
inflation under
this
control.
does look like
If
puts are
true, that would be
exiting.
problematic.
Don't forget
What
that
do you
there's
think
puts
about
that
that
just want to
assessment?
take profits at
Well,
4,005,
as I mentioned
4010,
earlier,
4015,
I think if you look at
4020.
the data that's been coming in since
The pullback
earlier
of
this year,
those can leave
you have
the
seen stronger labor market
4,000s without
conditions,
sufficient
higher
support.
inflation, stronger consumer spending, and
I
also
don't,
we
I
saw
don't
some
disagree
of the low
with you.
inflation readings from the fourth
I
quarter of
think
last year
the overall
revised
trend
away.
is
You
negative.
take all of those, they kind of all,
But yeah, there's
they
a
may be
potential
to some
for
extent
a
related
small
to
move
things like
up, which is
seasonal
all I'm really
adjustments
playing
or,
right now.
or a warm January, but nonetheless, they all point in the same direction, and they do suggest that the possibility that that ultimately would need to raise rates higher than had been expected. Of course, we have 2 or 3 more very important data releases to analyze before the time of the FOMC meeting. Those are going to be very important in the assessment we have of this relatively recent data. We'll be looking carefully at that, and all of that will go into making the decision, which we have not made, but making the decision that we'll make about what to do at the March meeting.
Well, thank you. On February 23rd, the Fed, the FDIC, and the OCC released another joint statement on crypto assets and liquidity risks posed to banking organizations. It's clear that regulators see undue risk for banks in the current environment and are taking a more conservative approach. Do you believe these risks are inherent to crypto assets and how they behave, or are some of the risks a product of the current regulatory and policy landscape for crypto assets in the U.S.?
So we're seeing, really, in the last close to a year now, we've seen just a remarkable set of events in the crypto space. Lots of companies collapsing. We've seen massive fraud. We've seen all kinds of things. I think, we have to be open to the idea that somewhere in there is technology that can be featured in productive innovation that makes people's lives better. However, in the near term, we see in crypto activity lots of things that suggest that regulated financial institutions should be quite cautious, and that's in doing things in the crypto space. And that's what we've issued 3 or 4 releases to the banks, along with the OCC and the FDIC. The Fed has, and they essentially say you really need to be careful here. You need to be careful. It's early days with crypto. There isn't the appropriate regulation. We're learning lots about the risks, and they are many of the same risks that run in other parts of the financial system, but without appropriate regulation.
Thank you, Senator Powell.
Thank you.
Thank you, Senator Sinema. We conclude the hearing. The Fed must make sure that workers and families are at the center of every decision it makes to strengthen our economy. We've heard a lot today about the role that Wall Street plays in our economy too. As you've said, Mr. Chair, we know that higher capital requirements make banks safer and stronger. It allows them to make investments in their workers, in their communities, in our economy. That's what they should be doing instead of spending billions on buybacks. I look forward, Chair Powell, to working with you to strengthen our economy. For senators who wish to submit questions for the hearing record, these questions are due 1 week from today, Tuesday, March 14th. To Chair Powell, please submit your responses to questions for the record 45 days from the day you receive them. I thank my colleagues for the very, very good attendance today. Only one member on each side was not here, one for health reasons, the other just because he's doing 12 different things. So I appreciate all that, and thanks for your testimony, your public service, Mr. Chairman.
Thank you, Mr. Chairman.
Jesus Christ, zero GCs are way too expensive. All right, well, that was cool. How's everyone doing? That was fun, right? Free money? It happened. They did the pumpy thing. Fixed back to 1873. Called that shit. Fun ride. It was over quick, but... Oh, bull trap. Definitely bull trap. Just bulls pumping to get VIX back down. VIX is gonna go right back up again. The hedge is extremely negative right now. And positioning is not positive. And now we're gonna get call capitulation, right? It was fun though, right? It's make a lot of money really fast that way. $2 contracts hitting $8. Not bad. I want to hear Powell talk again. Oh, sorry, it's just me now. I've just been grinding away like SPX contracts this entire time. I think I've made like 7 or 8 grand now. That was fun. To your point, Hazy. Yeah, I don't really see the upside positioning necessary yet for the pump that you're talking about. I will point out something interesting about the chip sector specifically. They are being bought into at a shocking rate in order to, well, let's say this, pumps in NVIDIA and AMD on non-options volume, so exchange volume, are highly correlated with drops in the VIX. So remember, NVIDIA is extremely heavily weighted right now. It's probably one of the most overvalued, if not the most overvalued company in NASDAQ right now. And because of its increased weighting since earnings, it makes it an excellent tool to push NASDAQ up. They're using the rest too, but the options chains aren't as beneficial. Google has a lot of put interest. Microsoft has a lot of put interest. Apple's just float is fucking enormous. QQQ gonna hurt bad when that fails. Yeah, it is. Yeah, I don't disagree with you. What's on the agenda for the rest of the day? We might settle out around kind of the neutral point here. 40-10, 40-20. It seems to be where we're seeing more positioning come in and Gamma starting to flatten out a bit. I'd like to see Gamma flatten out a little more. But like I said last night, and kind of what we saw today was, we saw large, cheap put positioning as a downside hedge. And then intermittent call positioning to trade upside volatility. Which is unusual. Generally speaking, you know, these events are straddled and our gamma is flat, right? Like gamma just flattens out, you know, generally around one like psychological break point. You know, like 4,000 or 4050. And then, you know, we get like, you know, a slight negative skew here, slight positive skew here, but fairly flat. You know, as of this morning, you know, very negative skew to the downside, and then really not a lot, just intermittent calls on the upside, but kind of, you know, weak, right? And what we've seen today is, you know, calls flood in to upside price action, cut profits, and then prices drop again, right? And that's all supported by this larger, longer dated downside hedge, which was bought primarily yesterday and the day before when puts were extremely cheap. And because of the discounted nature of that downside hedge, that opens up a lot more flexibility to play the upside. Sorry, I missed the KSS, JWN, DDS, GPS, XRT is turd here. XRT puts closing at all. It had a 424K 1 minute candle a little earlier. Maybe sometimes there's a little bit of put closure as we move into the ETF FTD period, but generally puts on XRT ramp up during that period. No, I was just drawing the positioning on the gamma chart. So right now, really no call side support long term until 40.45. Gamma's starting to flatten out between our current price and the 40.40 strike. So we are starting to get a little more flattening of the gamma, although the downside positioning is still very strong here. It's starting to flatten out here with some positive gamma on the is that 40.25, 40.30, the 40.30 strike, and then flat, and then we start to see some long side gamma. So yeah, this is the range we're starting to flatten out in. The current gamma exposure on SPX is negative 3.2 billion skew adjusted. Clip which ending. I'll just clip the last like 10 minutes. I got timed out. I'm back. Yeah, Fluffy nabbed you. I don't know what you said, but stop typing in all caps. It's annoying as shit. Take a look at NVIDIA. Still trading at about 240. I kind of want to sell some more. Well, not as high as yesterday, I guess. How's ES looking? Kind of like this is gonna fail. VIX is starting to move up, back up. Yeah, I think the little pump we got here might be about done. Played out. Puts coming in at 40.15, 40.10. Those are my 401s at 400, 60% gain. Nice, dude. Now waiting for my 407s that expire the 17th to print. I might hedge them without the money next weekly puts. Yeah, I mean, use your upside tests to balance your delta, right? On the longer dated position. So try to get your puts at a discount. It's really advantageous. Ban me. I don't care. I dare you. But I wasn't going to ban you for writing in all caps. I already took some profits, but there's any chance of another test of 400 on SPY today? Yeah. Having a brain fart moment. Any thoughts on selling deep in the money puts? Like at a strike of 10 on Jan 24s. For what stock? I mean, not unless put skew is really favorable, but on what stock? You'd probably want Ivy to be like sky high. Oh, deep in the money puts at $10? You want to buy Fubo at $10? You could get assigned. That's the risk. You get assigned like right away. If you don't get like a good price on the spread, someone will just assign you. I mean, you're not gonna lose any money because of like net credit, but it also just ties up capital for a really long period of time. And odds are the market maker is not going to give you a good price with the current volatility, right? So either you won't get a buyer or you'll get a bad price and you'll get assigned. I want to lick everyone's feet in chat. Thanks, Kendra. That's really nice of you. Do I make burgers for dinner or buy quesadillas at the local burrito place? I don't know. You want to cook tonight? You've been studying hard. Maybe you deserve to treat yourself. I'm here for answers, not contemplation. Quesadilla, Carl. The chat has decided what you're having for dinner. More downs with Jolt data tomorrow morning. Isn't Jolt data Wednesday morning? Or wait, is today Tuesday? Today's Tuesday. Sure. Yeah. Jolt data coming in before Powell or at the beginning of Powell's testimony could be a big negative. Also, the Jolts data is like always massively underestimated by analysts. They've missed on like every Jolts report for like the last 6 months. So could be a good opportunity to experience a little shock in the market. Russell, my Jimmies, welcome back to Dillionaire, man. Appreciate it. Thank you.
Happy birthday, Gert.
Yeah, I know. Today's
Yeah, we might have a chance, but we ain't
What's a
got
fair
rope.
price for
More
my
than a chance, cause we ain't
find
no
your
coke. Get the
profile?
cash in advance, cause
I'll
we
share a
hold
link
the flow.
later.
If you are what you
Please
be,
don't.
that makes Gherkin to go. Hoping that you
Size
really GG, cause
9.5
when the
on
shit's
Mondays
go
and
end up with the
11.5
moon,
on
man. Flex to the
Fridays.
5-10 weeklies while I'm selling CCs.
You should probably get that swelling addressed for the
Praise be to
physician.
RC and the BY, please, cause I need G and me to move soon, man. Got the band GG on the CNBC saying that he ain't seeing no collusion. And we might be apes, but we ain't that joke. Motherfucker, trades, this is popcorn cold. When the citadel falls, I'm about
Damn it.
to boast. Sail the Elliott waves like a Kramer.
Good opportunity to exit GME cover calls. There was one. Probably need to wait for another sell-off again. Upstart down 3% today. I guess Nvidia's only up 2%. Gonna fail through 2040. I kind of want to play that bounce back on Visa. Tesla sucks. Baba moved positive on the day. XRT's up. It's odd. Ooh, what's BTU doing? Okay. Good opportunity to exit GME cover calls. Yeah, I went over that. Okay, so we don't know when GME up? Well, we have an idea. When are you looking to not sell CCs on GME? I began pulling back CCs on GME last week. I still have CCs out at 17, 22, and 25. I'm probably not going to pull back the 22s or 25s unless I see some sort of risk. The 17s I'll probably close out soon. They're pretty profitable already. I think they're up like 60 some odd percent, 64% over here, and 65.12 over here. So yeah, I'll probably pull back the 17s relatively soon just to dodge assignment towards the end of the week. Assuming market reacts to ouchie downs with jolt data tomorrow morning, would it be better to enter calls to catch a bounce versus opening a strangle prior to jolt data print? You could enter a strangle, cut the calls as it drops, and then enter calls at the bottom when you take profits on puts. Right? That way you're hedged for whatever outcome from the data, right? You're hedged for the binary event, and then you can leverage your profits to catch a bounce. Not necessarily a guaranteed play, though. I mean, that's just like a way of playing that type of price action that you're describing. Hey, Gurk, what are thoughts on GME for the rest of this week? Slightly or flat or slightly up? I mean, FTDs are only going to yield positive results on a trending market. So if the market's flat or not trending, or, falling, I don't think we're going to see any positive price improvement from ETF FTDs. They're fairly minimal. We'll probably see elevated pre-market volume starting tomorrow, but other than that, yeah, I don't see a lot of potential in the ETF FTDs right now. They're low. They're historically low. When NVIDIA 270C gonna go in the money? Well, given that the price is topped out in like a less than 1% range, probably not soon. Like multiple tests of 238 to 242. I guess a 2% range. Oops, sold all my April AMD for June. Ouch. Sold all my April AMD for June. Okay. Did you not think April was... I mean, you're still over the 30 DTE on April. That seems like a very early roll. I guess you at least stay in the 45-day range. Have you ever dreamt about the market? That's pretty much the only dreams I have. I'm too cautious now with these bumps. That's why I rolled AMD puts to June. Okay. I guess I mean I'm not saying that doing so is necessarily bad, but why buy the upfront theta if you're gonna roll so soon into its decay, right? Like, would it? I don't know what strike you had, to be fair. So maybe I'm just thinking about this as like an at the money or near the money position. At April 200p or by near the money shorter dated. Oh, that's a tough choice. For Nvidia, I assume. Trader Joe's ice cream Sammys or almond croissant from local French bakery for Jolt release timing. Triple espresso with either. I mean, that early in the morning, the almond croissant. Hey G, I know you dislike these stocks and they're junk, but can you check out CGC for me? FTD shot through the roof in Jan. Cost to borrow is 95%. Short volume has been over 60% for weeks. Thanks, I love you. You guys need to stop chasing these fucking Twitter pump and dumps. I'm going to be completely honest with you. All of the things that you just named are not bullish, right? Canopy is a hot pile of garbage. It looks like they still can't make money after all of this time. But, I mean, how much more can their margins collapse, right? Yeah, I mean, it looks bad. It can have like a small pump, $4 maybe, going into like OPEX. They do have some similarities with like volatility shorts. FTDs aren't relevant. Neither is the cost to borrow, especially not the retail cost to borrow. Also, this stock is massively liquid. Don't forget. I think they have 322 million shares. They gotta look at the fundamentals. No one likes to do that, Dork. Balance sheets are boring. You're expecting a big drop for SLD. Can they delay SLD till Wednesday after OPEX? Thank you, sir. SLD begins on Wednesday and carries through Monday of the following week. The deposit period. They can sell their stocks whenever the fuck they want, including right now. I own other stocks in that industry. I'll give you a tip. I used to work in that industry, and I'll tell you where the money to be made on federal legalization of marijuana is. Altria, Philip Morris, British Tobacco. There's a reason all the weed stocks are so wildly underpriced. It's not just the fact that none of those fucking stoners can run a company, which is part of it. But it's also because they're heavily shorted and they will be bought out for their supply chains. Big Tobacco will come in with their billions and billions of dollars in cash that they had never have anything to do with, and they will buy out everyone and everything. And you will get your weed from 7-Eleven. It will be of a low quality, and you will like it. Thoughts on NASDAQ massively outperforming the S&P? I mean, they're both down. It's NASDAQ's doing better today than the S&P is, but mostly over like what, the last hour. NASDAQ's far more volatile than the S&P is. It still looks like shit on the daily. But most of the investor interest right now is focused in tech. So Apple, Nvidia, I mean Tesla's not doing well, but people are buying it still. Amazon's doing pretty good today. Google's not doing great today, but it's not doing that badly. Meta's up today, right? No, those Netflix is up today. Those all drag NASDAQ, right? So big FANG investment interest. People think they're defensive, believe it or not. There's a lot of people that believe that buying into big tech is a defensive purchase. They just don't understand how reliant those valuations are on continuous growth. We just got the second most reports since that GME earnings call. I mean, it's true though. I mean, so I worked in that industry 6 years ago now. And back then, big tobacco was already making moves. I can only imagine the progress they've made since then. Who the fuck do you think is lobbying Congress for the legalization of marijuana? It's not like little no-name fucking growers like Canopy and Horizon. Or it's a fucking other one. I can never remember their name. That's, well, Monsanto's owned by Bayer now. But they were trying to buy up genetics, supply chains back then to get their foot in the door. Tilray. I'm not thinking of Tilray though. I'm thinking of the dispensary chain in the US. I just can't remember the name of them. I just want to say thanks. You always answer, even if the stock is not your cup of tea. I appreciate that about you. Thanks, Chris. I try. I appreciate that, man. With the movement today, is your end of month SPX target range still the same? 38.50, 39.50 concentrated range. Yeah. With the lack of drop in Nvidia, any market move is driving it up. I'm not buying puts in that range right now, by the way, Yaga. I've been buying puts at like, well, I have some that I opened yesterday at 40.25. I have some 4,000s that I opened earlier today. I'm looking to, I don't know. If we see some positive move, I'd like to get some 39.80s before CPI. As we approach the end of this week, I'll probably buy a little more positioning out of the money. My 37.50s are still just surviving, so I don't need to cut those yet. They're getting close to break even though. Well, not break even, but cost. Yeah, that's kind of where I'm at. Tech is poo-poo. Yes, dork. I have April NVIDIA 220s that are currently down about 30%. Starting to worry about theta decay. Would you rather average them down? I mean, if you have April 21s, theta decay isn't going to become significant until you hit that 30 DTE range. It is increasing now that you're under 40. I believe we're under 45 days, correct? Oh, we're at 45 days. So it will start to increase the decay, but it's still not really bad yet. So, I mean, for the next 15 trading days, there's a little bit of opportunity. You could average down your decay. You could offset your decay by selling shorter dated puts. I don't know if you have the capital to do that, but you can sell like a 310, like 210 because you're hedged, or 200 to offset your theta decay. It's not gonna help a lot, but it'll help a little. Whoa, shit! What the fuck just happened there? Why is Fubo IV so high? Lots of options interest. I'm thinking about opening bull put credit spreads beyond that range to balance a little bit of my bear call credit spread. So shift into a condor. Okay, that doesn't seem terrible. Darbwire? What? What do you mean, what? Killed it this morning grinding the spy. Can we have a celebratory pickle vup song? I love you. Ah, sure. Today was a good day for just trading.
Pickle, 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 pickle.
Oh, my Google Chrome got like zoom locked. So I was like trying to scroll down and it just kept zooming in. It wasn't anything to do with the market. Do you mind sharing how risk-free rate affects premiums on options? If risk-free rate goes up, right, then the value of calls increases. If it goes down, the value of puts increases. So risk-free rate up, cheaper puts, more expensive calls. Ten-year, 6-month bonkers. No problem, man. I remember that the risk-free rate's usually calculated off of the 3-month T-bill. What are your thoughts on PFE? Very oversold. I actually like Pfizer right now. I've been thinking about it a bit lately. There could be a better entry opportunity in the near future, though. I know everyone thinks like, oh, you know, this is as cheap as X stock is going to get. You haven't been in a serious market downturn if you think that's true. I've been adding quite a bit. Nice. Yeah, I like the price. It's attractive if the market stays stable. I don't have a lot of confidence in a stable market over the next 6 months, but I do agree that the price from a valuation standpoint is very compelling. VIX is going up. Brandon. Well, tech stocks are largely valued on their future growth potential. So as margins collapse into the rest of this year, and don't forget they're still floating on year-over-year metrics from the previous quarter 4. Those are about to not look so good going into quarter 1. Their valuations will probably contract massively. Do you think whoever was pushing up so hard the last couple of days is done? Also, well, I think that the apex of the push has failed. That doesn't mean they can't push again, though. Also, thank you, Pyrex77, for making it harder to tag PyFi. That's sarcasm. Oh. Yeah, right now it doesn't look like we have a lot of upside potential. Should a woman's nipple hair be disclosed on their dating profile? No. That's something for you to find out later, like a little surprise. Maybe what are those little boxes that come with, they have like popcorn and toys in them? Like that. Gork, they're shorting treasuries again. Or just not buying them? You think Jimmy 18's expiring Friday are safe? No. Are you considering selling in the money calls into ETF FTDs in an uncertain market climate? No, absolutely not safe. Risky. Risky probably would lead to assignment or forcing you to buy back for more money than you sold them for in a moment of panic. Crackerjack, that's what they're called. Thank you so much. I think it's spelled with a C. The push up is never really done when they're just using tons of 0 DTs all at once. Seems like they can just do that at any time. No, they can only do that if they can get the market makers hedged to support buying out of the money 0 DT call contracts. It's expensive as shit. It's much harder to gamma ramp to the upside than the downside. And don't forget that they're still shorts. It's not like all the market participants have decided we're going to pump this bitch. There's still plenty of people that are not only short, but massively short. And they could do the same thing with a far greater effect. If you spell it with a C, YouTube blocks it? The fuck? What if this was a channel about charcuterie setups? It seems unreasonable. What's up, Dork? Yo, guess what? What? Secret penis? Vix hit a new intraday high. They're losing control. Unfortunately, I missed the last 2 hours due to work. Did you go over why NVIDIA is ripping? Share recall still? I mean, it's ripping relative to the rest of its sector. AMD's doing really well too. I think it's a combination of things. Options positioning at 2040, creating a lot, or 240, creating a lot of volatility. And also just buying of NVIDIA. It's pretty highly correlated with drops in the VIX. So probably big FANG buys, or maybe not even FANG buys, but like QQQ basket redemptions in order to drive volatility down. Since it's happening at such a massive scale, I would say it's more likely that it's from one of the like larger index ETFs than it is the stocks directly. Long Fang, short Nike. Hey Greg, I exited out of the put side of my strangle close to 4,000. Any chance of a pump back to 40.50, 40.60 by tomorrow? Thursday for 40.60 calls expiring Friday. Would you exit on any smaller pump? Right now it looks like the upside cap's about 40.30. So, I would probably position accordingly. Gamma's starting to flatten out above 40.30 and below it. So that's the best center point to target. Right now, they don't really have like good control of the VIX, so maybe we'll see like an overnight pump in futures or tomorrow morning. Oh, you're just trying to get out from under them? I mean, you're over 100% on your put, right? I mean, I would have probably closed them out today, like earlier today. Or here on this pump. I don't know, maybe. I guess you could get another one. Carrying them overnight's going to make it even harder to get out of them, though. I need your thoughts on TMF. I already bought some. I need to know if you think this was a bad decision. I'll tell you that my research involves watching one 3-minute YouTube video. Oh, Jesus fucking Christ. No, I don't particularly like TMF. It's 3x daily return on treasuries. Yields are rising. We're gonna find support just under 4,000 this time. Maybe not. Any update on the Meta situation? I don't like Meta, but options on it are kind of overpriced. Clear note 4.635. Jesus Christ. I mean, I don't know how anybody thinks this is bullish. It's really starting to feel like Burry in The Big Short, where he's just like waiting for it to crash. Hey everyone, let's pop that motherfucking like button for the boys, please. Yes, if you could, please pop it on the button. Pop the button. Who are the 5 dislikes? Who cares? Fuck them. How likely is an NSC to contribute to a fall after another derailment Saturday? I mean, it could have an effect on Dow, I guess. The derailment Saturday didn't lead to any kind of chemical exposure or anything like that, so probably not a lot. Trains derail all the time. This is pretty common. How much theta did Burry have? I think he was pretty close to running out of all the money in his fund, paying the maintenance on it, but a lot. I'm down 55% on GME and own 64 shares. Worth getting up to 100 shares to sell CCs. Yeah, it could be. Have you practiced selling them yet? Dancy? It could help with, income. I would target a lower price than 18. Because then you can, average down your share price pretty significantly if you're down 55% right now. If you could buy GME in the $17 or $16 range, maybe lower, that would be a big drop in your overall, like your net loss, right? And then you'd be selling CCs against a much lower cost basis, which is psychologically easier for people for some reason. Bussy is yesterday's classy. Let's not use those words ever. So hear me out. We test the bottom of the collar by end of day. It's fucking ridiculous, Brett. Could VXX reverse split have any effect on the VIX? No. It doesn't change their contract ownership. It's just division. We've been over this with splits before, right? Does everyone remember how they work? Per your DD last night, are you now back to stock god status? I don't know. No, probably not. We have to... SPX has to hit like 3,900 by March 31st. Then I'll be stock god again. And then 3 days later, when people overhold, they'll hate me again. That's the way it goes. It's been like this for 2 years. Why not just hit 3,900 today? Well, because that's not going to happen. Am I gonna have to start learning about bonds? I guess. You could just read Intelligent Investor. Are you expecting GME to run during March OPEX? It's been 84 years. It's been 7 months and it doesn't look bad. I will probably get some positioning for March OPEX. And technically, we ran in Jan on all the deferrals, and we also ran on October 31st and September ETF FTDs. Everyone likes to forget about them because they were short, but we ran most of the month of January. It was pretty nice. I made money on it. Nice slow price increase. Jimmy never gets that. Felt good. Felt like I owned a real stock. Any other big news data points coming up to be wary of? All of them. Like everything for the next like 5 days is massive. 5 trading days. We have CPI, we have PPI, we have fucking non-farm labor, unemployment rate, we have JOLTS tomorrow, we have SLD next week, all of that into OPEX at the end of next week. There's no atoning for Rebecca. I told everyone they could lose all their money, and then they did. I mean, I was right. Please let everyone know I made 5K in like 3 minutes on GME going from 20 to 23. Nice, man. Could you see SPX bouncing to 40.50 before any more data comes out? I mean, right now the upside looks pretty capped at 40.30. That can change overnight with futures, so we'll see what happens. I don't think 40.50 is out of reach. Even you know 4,100 isn't. It's less likely now than it was yesterday, but it's the potential for it's still there. Did you tell your bosses to stop propping up the market? Can we break down below 4,000 here? Oh yeah, there's a shitload of put interest at 4,000. Next interview, I'm going to say, when asked strength or weaknesses, I'm going to say strength is my mortgage rate is 3.25. They're just going to pay you less if you do that. No, the rev play is not over. We're still waiting to hear what's going to happen with the shareholders thing. I mean, technically, not all the money is lost, just a chunk of it. Is the market ready for JPOW to start talking again tomorrow? Are we going to drop another 50 BPS out of the gate? I mean, we could. It's definitely possible. Can someone make AMD and NVIDIA stop going up? Thanks. This is so uncalled for. They did stop going up. I appreciate your voice of reason and hammering in good habits to be made every day you stream. Thanks, man. Did you find it fishy that so many of the Republican speakers were bothered about financial liquidity? It feels like someone paid them to all push back on regulation. I mean, okay. They always push back on regulation. Do you pay attention to politics a lot? Am I a fool to have a very wide stop? Basically break even on my 421 4000. I'm up about 20% at the moment. No, I mean, well, you're not guaranteeing your profitability, but you're guaranteeing that you don't suffer any losses on the position. I mean, it's a very conservative stop. At 20%, with that much theta, I would probably be still willing to accept some loss on the position. I might have a stop a little further back, but I can also afford to lose the money. So that's really just a consideration of the risk you're willing to take there. If you have no acceptable risk below the price of the contract, then your stop is perfectly positioned. The Whig Party is not for sale. That's true. Yeah, it's very hard to lobby the Whig Party. First of all, you have to bring them an offering of snuff, which is difficult to come by, believe it or not. Would you hold slightly green 3900p that expires 331? I have slightly green 3750p's that expire on the same date. I don't feel bad for you. A buyout on the 11th hour is possible, but unlikely. I don't think the debtors are desperate. I only lose half, about 250 left. Okay. I can no longer afford to lose the money. How get rich? Step 1, stop losing money. I do pay attention, which is I felt capital banking requirements was a really odd thing for them to take exception to. I guess it fits with the model of no regulation. Yeah, I mean, especially when you're dealing with the Senate, there's generally a fairly strong, like, fiscal conservative push for deregulation of banking in the markets. I don't think it was like the primary point of his speech, but was stated, you know, as he is required to do. Well, encouraged to do. 2-year pushing to 5%. Fuck yeah. Half square, you just need to learn to sell covered calls. Step 2, be rich. Well, once you've learned to stop losing money, once you've stemmed the flow of losses, then you can learn to manage your risk appropriately, so that you're not losing more than you make. Like, you have to be, if you manage risk properly, you have to be really bad and unlucky. Not only bad, but also unlucky, to continue to lose money in excess of the, you know, initial risk taken. SPX bounce here? Not necessarily. Also, maybe not worth playing the upside of. I guess it could be. Well, like, if all your position entries have a max risk at like 2%, right? This is just an example. It's probably not applicable to options. But if you have a max risk of 2% and a profit taking at 10%, the initial capital, initial entry, it would take you 5 consecutive failures to lose all of your money. and only one win to make it all back, right? So can you be good at risk management and still win? Yeah. You're going to take more chances when you have more money. It's like leveling up in an RPG. Like, you don't go to try to fight the end boss naked. Five fails would still only lose you 10%. I know, that's my point, is that it's 5 to 1 though, right? 1 win to 5 losses. Is it a common strategy to sell CSPs past OPEX and buy a few calls with the cash to capture potential upside? You mean going synthetic long on OPEX? Yeah. Generally, put interest is at its peak right before OPEX. And so the skew on puts makes it very beneficial to sell them. There's risk though, because you have leverage downside, but still. Holy moly, the 2-year and 3-month note are both going to hit 5% today. I wonder if an inversion is ahead of us that has ever happened before on those two notes. I think inversion on those notes has happened before, but let's see how wide it gets. Why won't you appoint any Latinos to the quant team? I think we have one. Our quant team's very diverse. Thank you. Maybe. Maybe not. I'm not sure. What nationality are Dan's? Chicken Tender Daddy's the diversity hire. You're gay and Latino. Yeah, that's right. The pickle jar's inclusive as fuck. Thanks, CTD. What about a woman? There aren't any of those here. This is the internet. Get real. Every time I say that, Jen gets so mad at me. What about WebEx cams? I mean, they're not part of the quant team. Do you have a Chinese math guy in the quant team? No. We have a guy from Asia, though. We were specifically looking for Asian people who weren't great at math. We didn't want to fall into any tropes. No, not Russian. Dork, are you Latino? Wow, you managed to upset the only 2 women on the internet? Savage. But I am Native American. Perfect. I'm from Louisiana. I can be the mental disability hire. I think we could do better than you, Half Squirt. No offense. Now that futures fell below 4,000, do you think the 310, 38.25s that I forgot about are going to go in the money? No. Y'all need an office cowboy head? How are your phone answering skills? We need a receptionist. A cowboy head would be perfect in the lobby. As soon as Stefan hurries up with those fucking... What are they called? God damn it. What does he make with his salt rock lamp money? No, he makes money selling salt lamps. He makes things with plants. Not travertine tile. Oh man, you fucking roasted him there. Got him. I know. Terrariums, yeah. Stefan's terrariums that we ordered for the lobby. Stefan's gonna be our terrarium keeper. You don't spew vitriol at Congress. That's not how the third party works. The third U.S. political party, which I will now refer to as the money party, just invests heavily in both parties and tells them what to do. It's like hedging, but with people. Can I get a spot up front in the library? Well, I don't know if we'd have a library, but sure. You really have no females in your Discord? I don't know. Probably. Are you willing to fund my business idea? I want to sell dehydrated water. So, trace minerals? Like emergency? If you really want to be the librarian, I suppose you could carry around the one copy of Options as a Strategic Investment all day. Although, that sounds like a great way to get a serious back injury. Have you ever dropped so many mushrooms that it felt like the Earth was your surfboard and you were surfing a galactic wave? No. Elon was a terrarium hobbyist as a bullied teenager. He's still getting bullied. Remember when Yelia, the awesome female mathematician, was helping out and RSS chased her off the internet? Such a great community. Yeah, they were very inclusive of other thoughts. God, I hate Supersonic. Oh, what about toast with the Pi-Fi logo on it? Okay, now that's a great business idea. They chased away everyone with brains. Yes, the stupider want to do that. Can you get the tier note up instead of upstart? It's more exciting. I don't think I have it on here. Should I just buy puts at this point? That's up to you. He's still getting bullied and trying to turn Mars into the largest terrarium. So now that that's your new kink, Carl, do you just go in libraries and make a lot of noise? Check DMs. I updated NVIDIA's logo for their new soft goods business model. Okay, that's pretty funny. Beautiful. Beautiful top lift. And this is why we don't have any women in the Discord. We had a giant old dictionary that was heavier than options as a strategic. I can do it. I believe in you. Some analysts initiated coverage on Upstart today at $6. Cool. I hope I can buy it that cheap. And why your stream gets reported? Yeah, probably. It's toff loaf. There's an H. PH is pho. Is pod racing trading discontinued for the rest of the day? And that's why we're talking about an imaginary office? No. The market may still do things. It just probably won't. What's your YouTube analytics demographic data look like? Pretty diverse. People from all over the world. 3% of viewers are women. I suppose I could go to the gym and get a tan and bump that number, but I'd have to wear a lot fewer shirts on stream. I'm listening. 50% of the women are named Jen. Also true. I'm here for the quality banter. Thanks, Dana. An awful lot of gross stuff just goes over my head, and I just know not to Google much. That's probably a good thing. Does it have any data for other? Others like 0.2%? I think you should spend your 0 DTE winnings on some good gear, like Turin Noble, and become extreme Gherk the roided out stock god. No. VIX over $20 today? Probably not. Is the SPX 4000 resistance level so tough because SPY 400, ES 4000, and SPX 4000 are near but not exactly the same as each other, thus making 3 round number resistances rather than 1? What? Are you fucking with me right now? You need to pander to the female gaze, have a kitten on your back while doing house chores because you care about them, and talk about the pitfalls of toxic masculinity of the other stock streamers. Jesus Christ. How do I do this with my days? There are no other stock streamers? I know. Or didn't I diamond my 0 DTEs? I would have recovered all of my GME losses. I don't know. Why didn't you? Not saying you're a centaur, but if you were, what would you think about docu earnings? They might be good. Hey Greg, are the Greeks unchanged for GME? From this morning. I put them in the daily, right? Yes. Do you need them on the screen? I don't think they're very important right now, but I can put them on the screen. Oh, where's the fucking... There it is. Nope, but we did test 39.95. You're still posting dailies? What is this, 2021? Some people read it, Gaff. You mentioned the similarity of September in the daily. Are we looking at the same data releases over the next week? Yeah. It was a more of, do you think we'll test 39.90? We could. VIX is up pretty decently right now. I don't see any reason for the downtrend to stop at this point. Although it looks like we're going to see some support at the 39.95 level, at least on futures. We may see some profit taking from the 4,000s towards the end of the day. Or we'll just start to see gamma flatten out around like 410, 415, 420, which is possible. I mean, you can get CBOE data for free. There's a list of data providers on CBOE's website if you want more granular data. So, yeah, there's that. Han was on the Discord last night. He was fine. JPOW more or less confirming faster hikes is just taking time to sink in. Well, continued and possibly faster. Yeah. I don't have to read the DD. Enough people in the chat ask questions that would be answered by reading it that I don't have to. I've learned the more mad you get, the more important it was. Is that my tell? Unbridled rage. I've been here since you had the cookies out, but I've never been to the Discord. That's probably a win. I wish Walken would send a Ko-Fi so I could type, fuck you, Walken. I know you do. We have to have a library. Where else are we going to keep all of the GME God tier DD? What GME God tier DD? We used to? We used to what? Atomic? Telling me to read the DD is futile? I can't read. Okay. Well, there's your test. Future's still sitting at 39.95. VIX up? Shit, VIX almost at 1950. Getting close. Steamy. That's invigorating. I'll catalog all your DDs into a searchable database, your recipes, and product recommendations. Ooh. That sounds fun. I love reading about myself. Will NVIDIA or NASDAQ or NVIDIA keep up with us for a while? I got stuck on near the money March 17 put by accident. Okay, it's no longer near the money. So should I cut it today or wait for bad data this week? It's up to you. Do you think the bad data is going to outweigh the decay of your theta? I tried to make that not rhyme, but it did anyway. So glad I sold my 0DT 4000p at break even after being down 50%. It would be up 200%. Yeah, it would have. Saying I would like to purchase GME in the $17 range, could I just buy a put at $17.50, make some premium till I get exercised? Sell a put? Are you talking about selling a put? You would be the exerciser of a long put. I assume you mean a short put. You would sell a short put. Yes, you could sell a short put. If the price falls below $17.50 by your expiration, though, or stays above $17.50 by your expiration, you won't be assigned. VIX going parabolic. It's going up. 1950 is getting close. Is NVIDIA the Terminator from the future? No? NVIDIA's selling off pretty hard right now. I'm surprised people aren't more excited about this. Come get my 39.75 P's. Do it. Thanks, newbie. I know people do. That's why I keep writing it. Otherwise, I would just wake up an hour later. Any more pumps today to stop on the VIX? There's really... Yeah, there's really no leverage in this range to pump. I mean, put capitulation is kind of what you're hoping for now. Poors only like to complain. When things are good, silence. Yeah, I've noticed that. What's the balance of followers to haters that read it, you think? I don't know. It's got like 20% downvotes a day, so I'll go with that. 80-20. Like, I care if they downvote it, given that it's my own subreddit and I can just pin it to the top. I feel like they feel like they're being heard. Bullish, let me make a bear trap at 395 equals boom boom candles, SPY 430. Whatever makes your calls feel better. I heard currently you get $500 for each Russian POW you can hand over to the Ukraine armed forces. Why would that... How is that relevant to anything going on here? Is this how you're going to fund your trading account? Imagine being so butthurt by someone you never met on the internet that you take time out of your day to leave your subreddit and downvote you for a year after you were banned. I know. It makes me happy. Wait till the market crashes and GME crashes with it. God, the bargaining that's going to go on, the collective bargaining that's going to go on in Superstock is going to be beautiful to behold. It's like, no, guys, this isn't the real crash. We DRS'd, remember? Kenny's so short. He'll never get out from under this. Right? And then, like, someone will write a DD about how it's not the real crash. And Kenny still has securities sold, not yet purchased. Holy fuck, this market's going down hard. They are the float, after all. Yeah, and in a market crash, they'll all lose money at the same time. And they'll be like, who's selling? Like, who cares? TRSers check the infinity pool. It's empty and they're confused. They're gonna hurt themselves in that confusion. Glad I talked to myself about not buying more puts this morning to average down. I win again. Congratulations. Anderson Pooper will come out of the woodwork for 30 upvotes. Is the option chain on Fidelity live? I noticed the SPX open interest hasn't changed. Open interest isn't updated intraday. Could this be the MM trying to fill the big gap towards 39.82.40 before a bounce? I mean, yeah, we could fill the gap to the downside and then just keep going down, though. Actually, it looks like we've already filled the downside gap. Yeah, the downside gap is filled. Man, I gave this way too much room to the upside. See? We filled it. No, Gurk. Gap goes down to 39.82. No, it isn't. I just fucking showed it to you. What are people blind? This is the fucking gap. This is filled. You see the candle that's there? I don't need to check again. It's gone. Look, I'm gonna fucking delete it. Boom. Gap dead. There's another downside gap somewhere. Maybe? No, there isn't. There might be one back here. No. Just 2 to the upside. Still looking a lot like September. Yeah, especially with today's sell-off. A little sooner than September. Check TMs might be different because of WeBull. It just, I mean, the difference in gap sizes. Okay, so the difference in gap sizes is just going to be based on how much exchange data you have. If you have like 15 exchanges or 10 or 12 or 17, the more exchanges you have, the more precise your gaps are going to be. Sometimes there is no gap, but another, like one of the exchanges you're looking at reports it. And the video finally getting the rug pull. Maybe. It's still got a ways to go before it breaks down below gamma neutral, I think. God, imagine all the people that have been buying it at like 238 and 240. Gamma neutral still at 225, 226 almost. FOMC was at the end of August, the Jackson Hole Symposium. So it was like August 26th, I think. How precise is it if I have 69 exchanges? What about 42069? That's where all of my calls are. Thanks, Jade. Future bag holders for years. You mean like when I bought GME at 238 and 240? Ouch. Rough. SPY less than 50 MA. I know. In the event that we do see some put profit taking on the SPX, what do you think we might bounce to? I don't see why 4000s would take profit here. And we are just mired in puts. We're filthy with them. Not back above 4,000. Hold on. Let me refresh this, actually. Some calls may have come in. Yeah, it's just worse. There's just even more puts. It looks like shit. It looks like shit, and that's awesome. Because I'm bearish. The fact that we didn't immediately just rip back up on that bounce suggests we're going further down. Don't forget VIX is going up. Welcome to the club. I know, Gaff. It feels dirty. I don't like to be bearish. But sometimes there's just no bull case. HYG put swings, April, they're cheap. Let me take a look. I've been kind of keeping my eye on it. Yeah, I don't think that's probably a terrible idea. You don't like to be bearish. That's a lie. I don't. Most of my positioning, I mean, like all through 2022, I was like 80 something percent of my positions were bullish. JPAD didn't say anything. What did I miss that's causing this dip? Well, yields are skyrocketing, and JPAL said that they're likely to continue rate increases and possibly at a greater rate into the future. The labor markets are fucked, and they can't achieve price stability. It feels better being a bear if you have the right outfit and ABBA. It feels right. Down, down, baby. All that, and we can see longer dated put positioning building up. Yeah. But somebody told me it's just a blip, so... Sorry guys, I stopped the NVIDIA pump with 331 225p. You son of a bitch. Two-year yield just hit 5%. Yep. That's significantly better than NVIDIA's growth rate. Hear me out. Mozzarella sticks, but with brie. Sounds difficult. It could be delicious. Very gooey. But hard to bread. Maybe like balls. Maybe if you made the brie into like little brie balls. And then breaded them. Otherwise, very goopy. Yeah. I see the tier at 2.987. Hmm. $39.80, $3.95. Zero GT puts are building up more. Yes. Brie cheese curds, essentially. Yeah, I guess so. Although I think cheese curds, when melted, still have probably more density than a brie. If Mexican restaurants can fry ice cream, brie sticks can be figured out. True. What price range are you going to look to pick up some GME calls? I don't know. We'll see where we end up next week. I'm sure if you freeze the brie before frying, you could do it. Oh, actually, okay. That makes sense. My mom used to tell me that it was illegal for children to eat brie. Brie's made with raw milk, right? Not illegal, but probably it could be dangerous for children to eat raw milk because of their weaker immune systems. Listeria is a no bueno. Yeah, not fun. How much of your desired put position are you currently in? I have a lot of puts. I'm happy with them. I'd like more. I'll probably buy some. Came here looking for a fringe channel. I don't know if it's not necessarily 99%. I could just keep buying more. I have enough that I'm okay with it right now. And between my SPX puts and my VIX hedge, I have more than enough that I would be unaffected and profitable in a crash. Do I want more? We'll see. Came here looking for a French channel. Disappointed, no shouting bear and bull on each tick. Also, is NVIDIA a good dividend stock for my boomer port? It barely pays a dividend. It's 0.07%. And no, it's a wildly overvalued right now. I think 4,000 zero DT puts sold off a tiny bit. Maybe. It must be nice to make that shill money and buy infinite puts. Yeah, I get, well, for shilling, I get extra margin. That's how they hook it up. How many SPX 4000 did you add today? Some. Bear, bull, 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 bear. Raw as in unpasteurized? Yes. Kirk, the market looks sad. When do I do that thing that you told us not to do? Where we leverage the profits into more puts? Oh, Jesus Christ. Straddle, strangle, or both tonight? I'll probably just straddle. Actually, you know what? Since the hedge is so strong to the downside, maybe I'll strangle. Save some money on the calls. If I'm going to do that, I should start now, right? 39.80, 4,000. This isn't OPEX. You've been here how long, Half Square, and you don't know when fucking OPEX is? Wait, you're not supposed to leverage all your earnings back in? Generally speaking, no. It was a jape? Hmm. So that's how Matt Kors can make all those plays that he constantly loses on. Just got out of a meeting. Are we crashing? No. Putpex is fire. Oh, Jesus. I'm on the organic side, so I get extra butter for my shilling. Nice. How many shillings equal one port? Ah. I'm gonna sneeze. Nope, it's gone. This is even SLD. It's so hot. I know. 3,800 end of day, please. That doesn't look likely. See, this is the problem, is everyone gets, like, overly bearish. They're like, oh, SPX is down 60 bucks. I can totally buy these $200 out of the money puts. Like, everyone just, like, any price movement, and everyone goes immediately to the extreme. Like, up, we're going up. Time to hit 4,200. Or we're going down. We're obviously hitting 37. No. No, 3,800 is not looking fucking juicy. It's looking like it's $187 out of the money. So 100K BTC confirmed then? You've been hanging out with Kathy too much, huh? Blame JFresh. He was talking 38.50 in Discord. That's a target. That doesn't mean the price is going to rocket below that. That's the maximum range he's discussing. And that could be over the next 14, 20 days. It could be tomorrow. We don't know, right? But that's not a strike to buy if that's the target, right? The strike to buy would be somewhere between here and 38.50, right? Will BTU fall below its free money CSP trend line or back to 28? That depends on what happens with commodities. Target seemed like Walmart. I feel like if so, the price would be $38.49. Lowest prices always. You know, made in America is not necessarily indicative of quality. Keep leveraging all the way down to 38.50. Gotcha. Thanks, Pi-Fi. Man, no one learned anything in the last 4 days, huh? I love it. Never change, Pickle Jar. Never change. Well, it's been a year now, and I just want to say how wonderful this has all been. If it weren't for so many in the Pickle Jar lifting me up with their words of positivity and encouragement, I just don't know. Special thanks to Mike's LCCs and Gherk for all the love and DMs. Cheers. Did anybody time walking out for today? The market hasn't crashed yet. Fuck walking, ban walking. Okra is 100% the most disrespected vegetable. Just saying. It's because it's hairy. MSTR YOLO SPX 3850 is what I just took away. Now, last week before the pump, I had enough puts that could profit big, and then the pump made me capitulate at least half my puts with a loss. And then today there's $100 down. Really made me pretty depressed where I can make all the loss back if I bought puts yesterday. Yeah. I mean, that's why you hedge when the market moves against you. You stop out of short dated shit, and you hedge your longer dated shit, and then you average down your longer dated shit, right? Because a small pump in the market doesn't break the overall thesis. Made in America, assembled in America, is not necessarily every component is made in America. Speaking from experience, my products are made in the USA and boxes from China, glass from Italy, etc. I love that we'll take a Black Swan event for walking to be allowed back into the pickle jar. Yes, that's currently where we're at. Until then, he is banished. Banished to the Ko-Fi. Also had longer dated puts. The 0 and 1 DTE calls saved everything. It's pretty easy to do it that way, yeah. No, your zeros, DTE 30, 40s are fucked. Time for meta puts. I don't like meta. Is it still up today? It is. That's unreasonable, right? For a company that doesn't make money. Meta's up on layoffs and the bill for banning TikTok, right? I found Walken. We'll see him tomorrow. Okay. Good job, Atomic. What's the best trading strategy of all time, and why is it SPX straddles during economic data releases? I mean, just right now, because volatility is very high. Do you think there will be any decent bounces during the period leading into CPI? I would like to load up more. At least we confirm that it won't break 4,100. Maybe towards the end of this week. What is a learn? PS, I made $3. Thanks, Appalachia enthusiast. How did he say it? God, that was the worst. I've already blocked it out of my long-term memory. VIX calls in May, kind of illiquid. Is there something else more liquid? June? June and April are pretty liquid, I think. Starting to manage my 401k 2 weeks ago. It's up 10%. Get fucked, T-Row. Appalachia? Is that what he said? God, that was fucking... It was just the worst thing to hear. Appalachia? I think he said Appalachia. Even though he's in Ohio. Probability of 50% BPS rate hike went from 30% yesterday to 70%. Nice. I would love to hear any reflections on how, if at all, retail engagement, slowly depending on insight into market mechanics options, may affect broader market structure, market maker plans, etc. And they'll probably just eventually ban us from trading options. Or ban the pores from trading options. What are you talking about? VIX is at the same lows reached during the August run. Totally not mispriced, just forward-looking. Yeah. Do you think Docu could still outperform with good earnings this week, even with the bad data? I'm still trying to decide if I should cut my 421 puts today. It's getting close to OPEX. And Docu's earnings have been trending pretty well. I might be trimming back some Docu put positions into their earnings, and then I'll probably hedge those and see what happens. Oh no, the poor market makers. How's this price action going to affect the roll, if at all? That's a good question. I guess we could still see a pullback going into the roll. Or like a pump. It's something to be aware of, I guess. How much is already rolling, though, right? That's another question that should probably be asked. The price of the June and July contracts price did drop significantly, now compares to the same level last week. The ADK won't do that much damage. I don't know if that's purely on VIX, although it is 1950 as well. I mean, some of it has to do with a lot of the price decrease on puts had to do with volatility driving down, right? But now volatility is going back up, and so puts are going up. I've been eyeballing Meta 175p around 45 DTE. We were looking at those last night too. Yeah, they're interesting. Still pricey, man. It's more expensive to like short Meta than it is to short Nvidia. Hmm. Is the market in an uptrend? No. Slow climb into end of day. Like I said, we can get some put capitulation. I don't know if it'll be enough to drive us up into 4,000. It could be. We may just test it and fail it again. Maybe somewhere in between would be a better range to try to play. Like 39.95. I guess if I was gonna try to play the end of day pump, I would probably not aim for 4,000. Also, this is a bear flag. Could break down. You'd probably want to wait for this to break down. I would probably not play it. I mean, I'm not. Let's that's the risk of trying to get like 39.95s here is you're really like you needed to break above the bear flag. Before a failure, and you have less than 2 hours left on the contracts. I'm telling the pores, not the stuck god. Ugh, GME broke down below gamma neutral. That's usually not good. Well, for price improvement. It's gonna be about time for me to close my GME puts. Why? Well, I don't know how much range it has below gamma neutral. I'll wait for them to price up. Well, because I want to sell CSPs, and I want to use the money from my puts to do that. Newbies don't understand that half the time we mean the opposite of what we're saying. You mean people don't understand sarcasm? Is the upstart play dead, long-term coma, or just taking a nap? I don't think it's dead at all. I mean, it's getting shorted pretty heavily still. Remember, upstart we were looking for it to move into a period of cycles due to the extensive volatility shorting, right? The volatility shorting on upstart's continuing. Although an extended period of Fed rate increases is not good for the company in the near term. From a valuation standpoint, it's pretty bad for them. Which just means I can buy more of it for cheaper. It's because you didn't say /s after your sarcastic statement. Oh, I see. But what about the intonation? To avoid a watch sale, do you have to wait 30 days or 61? I'm getting mixed info online. I believe it's 30. You spent too much time in England. Your intonation is subtle. Is it subtle? So I need to be more blatantly sarcastic? Gross. It goes very against my dry humor. I was talking about the cat gherk. Your sarcastic japes are not subtle. This is spicy. Well, it broke down. Thank God that guy didn't buy calls. Right? Or maybe he did. Who the fuck knows? Wet humor. That's not good. You don't want to get your humors wet. That's how you get the plague. Ring a bell and hoot at every joke. Is that what laugh tracks are for? So people understand? My humors are balanced. Did your chiropractor hook that up for you? Thoughts on how GME earnings will be like? Quality questions. Small, very, very small chance at positive free cash flow. Probably still sitting on some negative EPS. Moderately unimpressive, but not necessarily any worse than expected. Where's a phrenologist when you need one? I went to a Jerry Springer show and we were told when to clap, laugh, etc. Oh, okay. What about hooting? Was that just, up to you? Like if you got carried away with the momentum? If you want to sell GME CSPs, would you be better off waiting for SLD? Yes. Yes, it would appear that we've found support on the futures 39.90 level. So we should plot the quality of grammar in the stream questions in relation to OPEX. Interesting, like a scale. Like the worse the grammar gets, the more likelihood of OPEX. Hooting is permitted, but absolutely no hollering. I see. With the way the last 6 months has gone, GME SLD CSPs will get assigned the following week. It's true. Hopefully they're at a low price then, right? We don't want to native English shame people, though. It's a global market. True. Tesla, Apple, garbage. What about them? My Tesla puts are up. Elon's a failure. SRF dying or just cheaper so I can buy more? We talked to the wife's Edward Jones guy today. They think this is the bottom. Imagine this. And this is what I think when you tell me that, Arnold Kent. I think that your financial advisor is basically just hazy. Ever been to an improv night? It's as bad as you think it is. I haven't, actually. I've avoided them because of how bad I think they'd be. Hazy might be better. I don't know. He did right before we broke down below like 40.10 call for a market top of 42.20, 42.50. I understand where he's coming from. What's up, Pickleman? I just stopped in to say hi. I'm still alive. What's up, Mako? Still keeping my eye out for OPEX reentry on Upstart and GME. Haven't seen my targets yet. How's your positioning looking? Haven't seen my targets yet. I still have covered calls out on both of them. I'm just waiting for them to keep dropping, really. Can you tell us a story about how your life got flipped and turned upside down? I could, but we don't have time for that today. Did Justin Bieber really die? I don't know. What happened to him? Cody Blakely is such a pretend American name. Stop calling us your colonies during your secret British chatter. They call you Yanks. Although, the British really should start calling Americans colonials. That'd be funny as hell. Pilgrims? No. Advisor, no make money when money not invested. Hi, Gurk. Should I be get calls or be get the puts? Be whatever you want to be. Be the change you want to see in the market. I dug a hole in front of Bieber's front door and put some sticks over it and a bear trap. Don't tell anyone. Okay, I won't. Broken logic. Do you think we get a pump before SLD? I mean, I hope not. I hope we just rock it down. We might. I mean, tomorrow is still going to have some volatility. There's still going to be straddling the rest of the data. We can move to the high side of the straddles as puts capitulate. So, yeah, we're still stable for now. But things are starting to break. VIX is going up. Yields are getting excessive. It's all looking very, very bearish, very, very fast. Not that it didn't look super fucking bearish before, but we did have that small pump that freaked everyone out. It was a big pump, let's be real. But it was definitely a little bit scary. If buying more puts here, do you think it's a bit chasing? I mean, I don't know. Depends on how much theta you're getting. Are you playing like a larger thesis to the downside, or are you just hoping it hits like 39.80 before the end of the day? Yep, VIX actually went up a bit. Last week, I'd be buying 40, 50 Ps. Today, I'd be happy. If next week turns out like September, people need to recognize we could be below 3,600. Sure, that could happen. Is that really a good thing to bet on? It's extreme, right? Could Jimmy see $16 before OPEX? Right now my target's like 17.50, but it could, yeah. There's still enough liquidity to short GME down harder. It's getting slim, but on a downtrending market, yeah, I think so. And weekly NVIDIAs that close at the top have 2x'd. Should I close these before end of day? Yeah, I'd be very careful with NVIDIA weeklies. It's still not below gamma neutral. And there's still a shitload of call interest at like 230, 235, and 240. So it tends to react pretty violently to positive index moves. So if you're killing it on some puts, I wouldn't hang out in them for long. Like yesterday, I sold those 250 calls and I just closed them at the end of the day. They're just too dangerous to carry overnight. But that volatility is starting to get shorted on NVIDIA, which is nice. What about your price target for Upstart to the downside? I'd like to buy more Upstart between $14 and $12. I don't know if I'll actually get that price, but today's encouraging that I may see it before OPEX. SM310 Apple puts are becoming very profitable. Do you think I should carry overnight? I mean, Apple doesn't move as quickly as NVIDIA, but yeah, I mean, it's still risky, still sensitive to QQQ movement or NASDAQ, like NQ movement. Where are all my chat emojis? I don't know. They're not popping up right now. I'm really enjoying it. Hey, I think you're really cool. I like you a lot. Maybe we could hang out sometime. I don't know, little fucking value. Is your brother gonna be there? Do you watch the Discord chat intraday? Yeah. I look at it all the time. I see what the people say. LFV in the house? What's up, man? He's right there. He'll be there? Alright, yeah, I'm down. It takes me like 6 hours to get to Brockton. Maybe 5 if there's no traffic. What about May and June puts? Are you closing and repositioning those? I'm cautious about it because I have a good amount of time, but scalping it would have been profitable. I'm not closing my May or June puts at all. Those aren't for, moves from 240 to 234. Those are for moves from 240 to 180. Will you afford to be marrying me? No. Have you prepared a speech when we open at 3880 tomorrow? I haven't. I'll just wing it. wonder if I bought enough SPX $24 calls for March 17th. I should buy more. They're still very cheap. Are my 317 NVIDIA 150Ps safe? I bought them at 208. No, you're fucked. Hey, dude, I went by a river yesterday and there was still lots of water. Sounds like you're a shill. Wait, what? Oh, because the river runs dry, DD? Well, maybe you just have a wet river. Have you thought about that? That not all rivers are as wet as yours? Maybe you should cover yourself up next time you go past the river. Dang, I swore, am I shadow banned yet? No. Are my 317 230p NVIDIA safe? Those aren't so bad. Those have a little more time to realize or to get in the money. 230s? You're halfway between the current price and gamma neutral. Hi Gorak, can you give a commentary on when JPM will be popping that collar? The collar is popped on 331. Currently, we are well within the bounds of the collar, and it is a successful strategy for guaranteed income. Hey, heads up, I put you as the glowing reference. I wrote a recommendation from you and signed it Gherk the Centaur. Alright. How many recommendations have I given people for employment since I started doing this? Unknowingly. Jamie always wins. It's because of his diamond hands. They're small, but they have great amounts of tensile strength. My boss thought your review of me was a bit strange. You're your own boss, Popcorn Trader. Stop applying for your own job. You're gonna find yourself underqualified every time. I know. Stop hiring yourself then. What do you do when you close CCs for a profit, but then you think you could have gotten more? I know profits are profits, but this annoying thought persists, and I don't know how to get rid of it. Profits are profits. Move on to your next position. Take what you learned into account next time. The interviews are confusing, though. When will it roll out? They don't hold it through to expiry, right? What? I don't know what you're talking about, Evans. You have to give me context. I know it's hard. There's only 200 characters. Thoughts on SPX March 31, 3600 Ps. Thinking of helping out Jimmy D with his collar. I have some. What about them? They're probably not going to go in the money, and they're pretty risky. Is AOC single, or have you called dibs? I think she's married? Should I quit my job and tell them I'm taking a position with Pickle Financial? When they ask what I do, I'll tell them I sit in front of a computer and ask dumb questions all day. That's, I mean, probably a good way to get them to fire you. Do you just do that at work? The last time I strong-armed myself with a job offer for myself, it was a tough pitch, but I ended up getting an acceptance from myself. Well, you know, if you don't love you, you can't love anyone else, Popcorn Trader. I've been messing around with the vertical spreads on SPX, and I don't know why doesn't everyone use them, or am I regarded? Everyone does use them. You're just a little slower to the party. That's all. We're just gonna sit at 39.88 for the rest of the day? Maybe. I don't know. We could bounce a little or drop more. It's choppy. No one wants to do anything today. Everyone already made money. Big Diggler. Figured out this would be worth a Ko-Fi. I listened hard to the past few weekend streams. Set my own SPX targets. Totally did not copy Goric. Was patient on entry. Waited for pullback. Bought on the local top on last Thursday, but also remembered to buy and easily rode out part 1 of 2. Oh, okay. I'll wait for the next part. Need to save some downside for Powell tomorrow. Oh, there's a lot of downside potential. I tried to make more money, but IBKR wouldn't let me buy in the money 0DT SPY puts because I'm in a cash account and I guess it's too close to expiry. Futures pump. My SPX puts are still red, but cautiously optimistic to say this is the first time I've been wrong, but for the right reasons beyond a GME related play. I figure this education is worth a coffee or two. Grateful to Gherk, Quants in the chat, Jedward. Thank you so much, man. I appreciate it. Yeah, you know, learning to manage your position is far harder and a far more valuable lesson than just being able to buy them. You know, everyone can buy calls and puts. This does not make you a trader. Being a trader means that you can manage the puts and calls that you buy effectively in order to get a profit, even when things don't go the way you want. Someone at my door? 1 second. I think someone's at my apartment door. Ah, fucking seriously? Hold on, the camera's shit in the bed again. Land shark? Well, the camera's fucked. I tried. It almost worked for a couple days, right? I'm still waiting on the new one. Alright. Now, I know it's going to be hard for me to finish this with my new image. Ah, never mind. I'll save it for later. I'm not in the witness protection program. Check DMs. What do we got? Bullish? Jesus Christ. This whole day is pretty fucked. It's awesome. Yeah, I want to delete all these lines so I don't have to go back and find them later. They're bringing back Michael Burry to pay us. Okay. Huh. No, I'm still not here. Maybe last time I tried this, my computer crashed. But maybe that's just what it needs. Yep, camera's a piece of shit. Either that or my USB ports are fucked up. I really don't actually know. I'm back. Look at that. Why's Fubo on the screen? So your current thesis that both the computer and market could perhaps benefit from a crash. Yes. If you think your USB ports are having power issues, you could get a powered USB hub. What's that? Does that also just connect to a USB port? Wouldn't that just perpetuate, like, daisy chain the problem out to another device? They make ones that are wall powered, but it needs to hook up to my computer. It offloads the draw from your card onto the hub. I have like a 1300 watt power supply. I don't know why I'd be having power issues with my USB ports. The million volts that's going through it currently? What do you think, I'm fucking cranking out soft goods in here, dork? They have a separate power source that takes care of the power, and the computer is just there for the data lines. Huh. Wouldn't NVIDIA call capitulation? I don't know. I guess they just need to lose more money. I guess we're going to find out how fearful participants are here in a second. Camera problems seem like Epic Pen. No, Epic Pen's a software issue because its software is garbage. Stop buying puts, it's already dead. I can't, and you can't make me. Girk, I just joined the stream. Are you buying back into long puts, given that we've been dropping, or waiting till the 10th? I started buying puts yesterday. I bought more today. It's all on the 5-volt bus, and who knows how well the power traces of your motherboard were drawn by some 12-year-old Chinese person that copied a Western PCB design layout. The weakest link matters. I have a AS Rock motherboard, I think. Actually, I don't know what it is. I don't know who makes this. I think they're Taiwanese. That could be NVIDIA's plan. Everyone becomes their distributed factory cranker. You can only opt out with one of your 2 NVIDIA cards. Only bull case I see is Ukraine, Russia ending. But that's definitely not going to end until the U.S. markets crash, right? I bought a 39.85 call to hedge my 39.80 put. I instantly regretted this decision. Too soon for regrets. Ugh, this chart is fucked. Whew, that was close. You left the Discord call. Oh no. Oh shit, it closed. Okay. It should be up and running again. I don't know why I did that. It might have been when I unplugged my camera or something. Oh shit. I wonder if this keeps breaking up. I guess I can sit on it. Don't need to really do much. Put sell off? A little bit, yeah. I mean, it's just power hour now. So there could still be a lot more movement for today. VIX at 1959. Whoa. Relax there, buddy. Consumer credit came in lower than expectation. All right. It's not power hour without the sun. Here, sure. Oh, wait, that's the wrong one.
5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Hmm. All right. Is this gonna just reject here? It's so volatile. I don't really want to move my stop up. Not yet, at least. I still have 3750 puts. They're up, but barely. I might average them down a little. Or, well, average them up a little, I guess. We'll see how much theta bleeds off in the next couple days, and if we, like, bounce out of the money, like, bounce further out of the money again, then I might, like, if they go negative, I might average them down. They're 3750s, not 3700s. Huge put wall, Fubo 317 at $2. What are your thoughts? Does it mean $2 CCs are safe until then? Generally speaking, yeah. Big put walls kind of crush the price. It also might increase the price of puts and skew the delta so that CSPs are overvalued. What data comes out tomorrow? Well, Powell has another testimony tomorrow with in front of Congress. And then I think we have balance of trade and jolts. Yeah. 17-week auction and the 10-year note auction. Do you have Greeks for Meta? Sure do. Or don't? How the fuck do we not have Greeks for Meta? Am I losing my mind here? We don't. That seems like an oversight. Didn't we have them before? If the market corrects, all the round and bottom breakouts are going to die again, Stefan. So basically, we're avoiding entering out of the money positions until we clear a possible bump around the 10th. No, I'm just not buying 3750s. Is this gonna give me some fucking breathing room? Jesus Christ. This contract's barely fighting back against decay. You check out FSR. My buddy keeps telling me it's going to 0. Not very far away from it now. I don't know if they will. They have a lot of patents. I have friends who work there. It's not a poorly run company. Why does he think it's going to 0? Because Tesla wins everything? Consumer credit expected at 25 billion, but actually 14 billion. Just to confirm, people have less credit available. So less money to spend. So market's bullish on that? What? Why is the market bullish? Just because people are selling off some puts doesn't mean anyone's bullish. Are you doing that thing where you react to the last 10 candles and that's how you base all your forward decisions on market price action? Why does this feel like an overnight pump? That would benefit people who are out of the money on call positions right now. Man, this is having a hard time grinding up. Oop, there we go. Seen us? VXX is a reverse split today. Is there much call positioning left at 4,000? No. 4,000's pretty negative. That's probably the extent of the pump back up. Those don't seem to have very much momentum. Maybe another test. VIX really isn't dropping much here. Less likely they go searching for dead calls overnight. I don't know. Close on SPY below 398 is a bearish signal. Perhaps trying to prevent that? Maybe. I mean, the hedge is very much against them, and I don't think 4,000s are going to have to capitulate. So VIX isn't really driving down at all. We'll see how much momentum they can scrape off of, like, the put capitulation at 39.80 and 39.85, but I hedge my SPY calls with monthly expiry NVIDIA July 150p. Oh, okay, those aren't bad on a drop. Well, buying into them at this level isn't bad. If it drops back below gamma neutral, they'll print. 200 SMA on SPY is 398. I know, it's just a SMA. We could pull back up to... Oh, I don't know what the fuck SPY is trading at, but it could probably pull back up to 398. Oh, it's at 398. And SPY's kind of a piece of shit. Sell your puts, thanks. I don't think I will. Where can I get live options data? You can't? And what kind of data are you looking for? You probably can't. Not reasonably priced. Like flow you can get live, but that's, you know, worthless. You can build out a database, and then you need a live API. You have to pay per request for live data. Best short ETFs to buy for those bulls who hate puts. SQQQ is pretty decent. If we're expecting a longer term downtrend, SPXS is okay. There's a bunch of other ones too. Just like a SPY bear ETFs. It's just ticking back up now. Oh. Futures are having a hard time getting to 39.95. They might start running out of momentum soon here. It's not looking great. Overnight straddle level. I already strangled when we were trading at 39.90. So I'm at 39 or 4,039.80. Strangle for overnight. Yeah, JPOW speaks tomorrow to the House. I think JPOW will change his tune tomorrow. Seems like he controlled the testimony pretty well today. I mean, he said some moderately hawkish things, but yeah, he's a lawyer, right? He's pretty versed in the procedure. For things like DVN, do you buy in before posting to Pickles Picks? Nope. DVN I might have bought, but I think I said I had a position already, right? I don't remember. Did I have the position already when I posted it? I'll look. Usually I don't have any position. Unless I say otherwise. I can't remember if I bought DVN the Friday before when it dropped. Yeah, I already bought some. I had 1,500 shares that I bought on Friday, and then I was gonna add to it as it dropped into my target range, which it's still really not done. Yeah, usually if I'm carrying a position, I disclose it. Unless it's like one of my like long-standing like open positions that I've disclosed hundreds of times, like AMD or something like that. It doesn't really matter. Difference of 5 cents or less. I'm just curious, or 50 cents or less. If you let people front run or try to get some of the position before sharing. I mean, I'm just enter Monday. I think the thing is a lot of people think I just buy at market open on Monday. I usually don't. I usually wait and see how like the next week's gonna play out before I enter anything. I mean, I suppose, yeah, I could get front run if people just rush into the position before me, but I also don't trade like stocks where that matters. Like if you've noticed, I don't trade a lot of like mid, small, or micro caps. I mostly trade stocks with big floats, so I'm not really worried about front running. I have ATP open right now. It's fine. Salty. Why did you pick SPXS over SQQQ for your March 17 calls? I just haven't re-entered SQQQ. I sold CSPs on it, although after today's price action, it doesn't look like I'll be assigned. I had an SQQQ position before, and I closed that. I didn't re-enter it because, frankly, SQQQ didn't drop enough. I'll probably reposition into SQQQ towards the end of the week, depending on if I'm going to be assigned or not. Really sharp bounces in the indices. And so the reason I bought SPXS is really sharp bounces in the indices tend to the 3x indices will tend to retain their value, like their increased value over the previous period. And so they can be advantageous when you get like a sharp bounce. %70 chance of 50 BPS. Holy shit. Yeah, I don't really care about front running. I generally don't trade illiquid strikes, and I generally don't trade illiquid stocks. So like liquidity is not really an issue, and there's like pickle jar is just not that fucking big. Is there a 50% chance of 75 or higher? No. There's a 70% chance of 50. I don't know if 70.75 is still in the target range. I guess it is. Just like, where are these percents coming from? They come from the Fed Watch thing. They're bullshit. Yeah, Atomic's gonna absolutely rug pull the fuck out of all of us on Fubo. You think the pump from the last few days is done, or is it likely we might experience something like that again before March OPEX? We could. Yeah. I don't know if my Dillard can take much more of this teasing. Well, we failed the bounce, right? So now we can move lower, sell off into the end of the day because people are freaked out. That'd be cool. CME Group Fed Watch, to be precise, like Vegas, but for FFR. Yeah, it's... That's not a reverse head and shoulders. That's a drop, like a descending wedge that broke out and then failed. Reverse head and shoulders are sharp, bullish reversal. This was like a slow grind up. Zoom out a little. Still not a bullish reversal. The fucking volume down here is dead. There have to be bulls for there to be an inverse head and shoulders. Even on like the 5-minute. You have a lower high too, which isn't good. Can you reinforce the bear case for meta now that I'm over leveraged? Guess what? 10-year pushing 4% again. Nice. 18.15, some kind of strong resistance for GME. We've touched it like 20 times today. No, just probably no sellers there. Lack of interest. We're already below gamma neutral. I missed my call money in Jan by a few weeks because I didn't roll Jan. Now I don't want to buy calls. When VOPs? VOPs on what? On GME? I don't know, like maybe towards the end of next week into OPEX. I don't think we're gonna get any significant upside for fucking SLD. Although I do feel like the end of the day is gonna be pretty fucking boring. And someone's buying up a lot of 39.80, 39.75, and 39.70 puts. VIX just under 1950. I wonder if they're selling puts. Selling puts and calls? The end of day kind of just looks choppy. There's a shitload of in the money puts still. What's your outlook for GME Upstart for the next 2 weeks? Just more downside? Yeah, pretty much. I mean, we have the ETF FTDs over the next few days. That could lead to some positive price improvement, provided the market stays stable. The real question, what's the real downside of selling CCs after that? You lose 100 shares if you fuck it up? After what? Like after it pumps? Yeah, that's pretty much the downside. Live view of theta decay? Yeah. I mean, I guess there's long-term, like, tax implications if you get assigned. The last 2 bars killed my 0 DTEs. Okay. Quick capitulation? No. It just looks like a little bit of buying. I don't see any puts closing out. Maybe some out of the money ones. Who the fuck's buying in the money puts right now? Hmm. I guess if 39.95 puts close here. Where's that gap? 39. 39.98. It's a really small gap though. I'm just trying to have a cost basis that won't get me laughed out of the Discord. Glad I got VIX $20 calls early this morning when they were cheap. It's gonna hit that $20 spot tomorrow, sure enough. Maybe. VIX can cool overnight. Be careful. Open returns from the pump are under threat. Hmm. $23 left. Remember when I said I regret my 39.85 call? Well, I don't regret it. Nice. Could you check out AYX? Dad works for them, is about to vest on some shares. Trying to subconsciously teach him about covered calls. What's it called? AYX? Oh. Decent volatility. Looks like yields aren't terrible. Eh. I don't know what the fuck they do. Analytics. Yeah, I don't know how defensive it is, but the yields seem okay on it. Decent improvement since December. Really decent. AI machine learning software stuff. Yeah, they're doing pretty well. Decent place to add HBM. Is it between the two lines I drew? Look at CWAN. My friend works there as an analyst, and I want to short the fuck out of it. Not a lot left to short. I guess you could. They're not performing very well in the current macro environment, but their earnings seem stable. So probably just big index moves. I don't think buying anything for like long-term holdings right now is a particularly great idea, because you know, the likelihood of you seeing a discount on those things in the future is pretty high. You see Fubo go to $1.50, unless it's like commodities or manufacturing. Something like, or something very defensive. I would probably consider maybe waiting a little while. If Dow drops hard, Cat will too. Cat's trading way over its historic like PE ratios, like double. So defense sector is risky because, I mean, right now it's mostly being propped up. It's a little overpriced and it's being propped up by the Ukraine war. So normally I would say yes, but right now probably overpaying too. Should be less inclined to wait for commodity plays versus something else. Yeah. No, that's my only copper exposure right now. Sounds like brick and mortar NFT stores and an NFT marketplace. Mr. Mayo himself is having a chat on Bloomberg. Bearish. Hey Greg, I bought some Google at 90. Do you think it could drop even further? Do you have a PT? I do. So currently I have Google. I sold some cover calls on it yesterday. I think my cost basis is somewhere near 80. My current buy-in target for Google is at $76. Down to $70. There's an upper range around 83 that you could buy in at. I already have shares from that range that I've been selling covered calls on, so I'm not DCAing until it drops lower. 83, 85 is not terrible. I do think it can be bought for cheaper though. How do you view options for SPX on WeBull? I can't figure it out for the life of me. You type in SPX into the chart, right? Type it in. And then you click in the top right corner and you go to add widget and you add options, and then you can look at the options. Thanks for the look over on AYX. Something inside me hurts when Padre wants to sell out of a few thousand shares and doesn't know about cover calls. Doesn't mean he's wrong in this macro though. I mean, currently based on their valuations right now, which are about 100% up from where they were like 2 months ago, he's probably not that wrong. But yeah, he could sell in the money covered calls, collect the premium and price increase, and hold on to his vested shares. If that was, if he was just considering selling anyway, right? Like if he thinks they're overvalued based on the current pace of the technology, which I would agree with, then yeah, that's something you could do. And then you get the credit up front, obviously, but you still maintain the shareholding if the price drops back down again. SRF down all day, currently 1171. Lower prices incoming, or is this a great entry? It could drop lower. I mean, I know they're starting, I know they said they were releasing some shares. I'm not sure on what date, but when they release those, then they go out and buy uranium, which drives up spot, which drives up the value of the fund, increases share price. But generally speaking, is if SRF is trading at a discount, the deeper the discount, the better the buy. If it's trading at a premium, you don't want to buy it. That's still like a 3 to 6 month play, mostly due to near-term supply demand on uranium, but demand could pick up even more depending on, political events around the world. I have 120,000 Canadian Monopoly money. Pulling for a crash. Is it smarter to do real estate versus buying stocks like KO for cheap dividend? I know you know little about CDNRE, but based on the news you see, I think you're still pretty far out from a bottom in the real estate market. A bottom in the equity market may come far sooner. If you time the bottom in the equity market, the potential returns are significantly higher than anything you'd make on real estate. But you could always time the bottom of one market and then roll over capital into the other. Yeah, no problem, man. Show me how to time the bottom. I mean, if you're just going long stuff, it's not that hard, right? But I don't know, the current like fair value of the S&P is somewhere between like $2,600 and $2,800. I guess some valuations would say around like 30, 50, 3,100, but oh, you need a video on the screen. There. Are you happy? Where'd Upstart go? I keep seeing articles about housing market rebounding, and it's only going to go up again since prices went up for a month. Haha. I mean, the current cost to finance a home is fucking ridiculous, right? Like a $450,000 house is like $950,000 after financing. That's going to create an oversupply in the market, which will drag down housing prices. I mean, it hasn't done it yet because the housing market is so fucking frothy, right? But it will. Give it time. You're a wizard. I know. So painfully close to 600 likes. What the fuck, people? Like the stream. When's the bankruptcy auction starts, I'll be trying to get as much land less than 40 minutes from a hub as possible. If market corrects like a big correction down to 3,500 or less, are you more inclined to open synthetic longs leaps or just grab the boomer shares for a rebound? Both? Depends on what I think has lost too much value. Sorry guys, I shill this so Greek doesn't have to. Thanks, man. When next cat play? Not anytime soon. The other problem is that new construction's offering lower rates and undercutting resale. Yep, that will be a problem. especially as pricing corrects. I mean, there's people still like I pay attention to Zillow and various regions and keep an eye on it. It's not like it's like something I do while I'm like taking a shit, but I look around and there's still people asking like fucking 800 grand for houses they bought for 400 grand a year and a half ago, and they're out of their fucking minds. Now they might find a greater fool, right? But that only goes on for so long. And it's a lot harder to find a greater fool when interest rates aren't 0%. Doesn't matter. Well, then the housing market collapses under negative equity. Either way, I mean, it's not good, right? Is that crash prices? I mean, it could be. It could crash into a price above that. It could crash to prices below that. Assumable mortgage on homes purchased within the last few years is what people should be looking out for. Yeah. Especially when those home prices are down and the equity's underwater. Yeah, people are stupid though. Especially like, I mean, like I don't want to say all real estate agents are stupid, but as a demographic, they're generally just interested in making the sale, right? So they're not going to be like, oh yeah, inventories are way up over the last like 3 months, and that's only, the current pricing is only going to last so long. They're just going to try to sell you the house or property at, the current market price, which is based off what, like a couple comparables in the area. It's fucking bullshit. Don't buy now, that's dumb. Will never be spoken by an agent. Yeah. I can say it though. I've got no skin in the game. Well, it's pretty simple. This is how I'd go about it, right? If I wanted to buy a home right now, I would find corporate offices for major corporations that had opened in the last 2 years in a specific area, right? And then I would identify their employees and see who bought homes in that area in the last 2 years. And then I would offer to assume their current mortgage that's at like 2 or 3.5% before their equity goes underwater. It would help if those corporations recently had large layoffs. Those are the people I know who became realtors. I wouldn't trust with safety scissors. I know a couple people who are realtors that are pretty smart. They like the job. Some people like sales. I know people who are pretty successful in sales, and it's, it's fun. You're a bottom feeder, and I love it. I mean, listen, you lost your job at the company that you moved for, and you bought a home. You might need some help out. Maybe it's not. Maybe it's more charitable than it sounds. Like it's still a win-win for both parties, right? Buy a large company with a large telework workforce, move the company to a new area, build hundreds of homes, then force everyone back into the office and sell them all of your houses. Okay, yeah, but I was thinking like with less than $20 billion. I've been gone for a while after blowing up my port. Back with a 30K loan. Round 2 fight. Should I post on our Wall Street bets? Oh, Jesus fucking Christ. Man, just look for income strategies that'll pay out more than the value of your interest. Like yield more than your current interest cost. Don't fucking YOLO into stupid shit with a loan. Like if you got a good loan and like you got it from like a credit union or something and you got it under like the risk-free rate, you can just make money off that money. Risk-free, right? Like someone was telling me they got like a 3.5% personal loan the other day for like 50K. You can just make money. That's just free money. On the risk-free rate, that's free money. Why the fuck would you YOLO it? I took out a 5K loan one time and bought options. I'm still paying that loan off. Oh fuck, that's rough. Yeah, don't do that. That's stupid. That's like over margining or over leveraging your margin. Sorry if you've answered, but I've been gone a lot today. No worries. Going into tomorrow, looking pretty bearish data wise. Are we looking for J-Pow hopeful pump, straddle, strangle? I'm already strangled at 4,039.80. I think I like the strangle a little better in case he's, you know, there's continued hawkishness tomorrow. There's also the JOLTS report, which I expect to be negative, which means, you know, jobs up, right? More job openings. If both of those things are slightly negative, you know, we definitely have more room to the downside. So I'm opting with the strangle over the straddle because I think there's less upside potential. Not so much that I'd be willing to go like 1 to 2. I still think there's some interest in at least freeing up some of the call interest around 40-30 still. So, yeah, I still think 40-30 is like near the upper range for tomorrow. And then, you know, lower range, who the fuck knows? Powell already put a pretty decent amount of emphasis today on the jobs reports, and I don't expect any of them to be show any softening in the labor markets. So yeah, I think overall tomorrow is pretty bearish, but I do want to have some calls to cover that small amount of upside potential, which we could see in the early part of the day. What's the least DTE I can strangle with overnight? Like 3 to 5. 3 is risky. 5 is better. And yeah, I know, it's pricey. It's been 2 years, and your best educational video was what you uploaded last night. Bear bull, gap bull. Softening the labor markets, same like families out of work. Yeah. But that goes back to the thing I just said about home buying. Yeah, no problem, Ben. Happy to help, man. My strangle's for the 17th, but it's expensive, so you know, you don't need that much theta. I'm just buying it because I can. Unsecured personal loan, 4 years at 9.99% APR. Not YOLOing anything this time, promise. All right. Jesus Christ. That's really high APR. Have you looked into anything with like sustainable dividends above 10%? if volatility spikes, QYLD and JEPI can be really, really profitable as you wait for like a market bottom, right? Because they sell calls, and so if IV is really fucking high, they could make. You don't want to enter them in advance of IV jumping because the value of their share ownership would drop, but in like a market bottom type scenario, those could be really interesting. Ding ding. The day is done. Well, the end of the day, not as exciting as I would have hoped for. A little bit of sell-off after the test at 39.95, which we kind of talked about earlier. Closing the day out at 39.85. I believe they were maintaining a bearish range on the SPX. We'll see how call interest looks going into tomorrow morning. I kind of just outlined my thoughts a couple minutes ago on, my overnight straddle. J-Pow's speech tomorrow is probably going to be in line with his speech today. I don't expect him to deviate strongly from the narrative put forth already. That narrative was a little more hawkish than I think people were expecting, and we're starting to see yields rise on a slight expectation of 0.5 BPS at the next Fed meeting 2 weeks from now. Puts are still relatively cheap on a VIX that's sub 20. We'll probably see continued accumulation of puts to the downside with more theta. But that doesn't mean that we won't see any upside push. There is a significant amount of call gamma locked up around the 40-30 strike right now, and we may see a pump in order for some of that to be relieved. So think of our current range from between 39.80 to 40-30. If Jolts comes in negative tomorrow, we may slip the lower bound. And that really puts us down into the range of like 39.50 again, maybe even sub 39.50. Remember, as we fall, gamma at the money increases, so we'll have a better idea as we move towards positioning in those lower ranges. Yeah, you don't want JEPI now, though, F1. You'd want to wait until there's, like, a big spike in volatility, and then you'd enter JEPI so you can yield off the near-term profitability of selling CCs in a high volatility environment. Thank you guys so much for tuning in. I appreciate it. I will see you all tomorrow morning. Have a great night, everybody. Later.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
have what?
Look, Dad, it's not
Where did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico!
Sit, Krian, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show!
Not an advisor. Frigulon.